Clued. So can you kind of start us off there with how you got into AI in the first place and that like how that led you to creating Clued?
Yeah. So yeah, first, thanks for having me. So yeah, my name's Sats. I'm the founder for Clued. Just a very quick background of myself. I've been building digital products for more than a decade already. So it kind of started when I was doing my first startup. So that was my first job, and it was a travel algorithm that I was doing. So basically, we plan trips, which is the top use case for ChatGPT now, but I did it like almost 15 years ago.
Mm.
But yeah, I exited that startup and continued to focus on AI, conversational chatbots and stuff like that. So I went on to build chatbots for the banks, healthcare, etc. And I guess where it really came together was when I was at ByteDance. So I was doing both security, cybersecurity, and as well as I was with the C team doing AI. So yeah, that was kind of where I guess Clued kind of came into the picture because one of the problems that we were facing was really agentic memory. And the thing that we were all doing, and every other big tech companies are doing, is basically increasing the context windows of the models. So we've seen that with Opus with 1 million context windows right now. But I felt that it still wasn't really solving the problem.
Can you
So
can you explain what it means to open a context window? Not all of us are super technical, so
yeah, sure. So essentially, a context window is like a kind of a short-term memory that the AI has of you. So your preferences, your profile, and stuff like that. It gets fed into that, and that's kind of how it remembers you to a certain extent. But so think of it as a water bottle, right? So the water bottle space is finite. So that's the context length that you have. So we've gone from 100K to 1 million right now. So the bottle got bigger, but it's still finite. And the amount of stuff that you can put in is also limited, right? So what happens when that bottle gets filled up with all this information and context and memory of you? The AI models, what they do is they do this thing called they compact your memory. So essentially they summarize everything into a smaller chunk.
gotcha.
And essentially during that process, details get lost, right? And then it just goes on and on. So as you continue using the AI, it builds up again, it compacts it again.
Mm.
So things that were compacted gets compacted again. So it's like a square problem, right?
Mm.
So it's an exponential thing. And then that's when you realize, hey, the thing that I mentioned, like let's say 5 months ago, or 3 months ago, right? The agent kind of lost a little bit of that context, of that remembrance of what you said. And I'm pretty sure most of us have encountered that, the agent kind of forgot everything.
Gotcha.
So yeah, so that is the whole context thing. It's really like a short-term memory, and what we are building with Clued, it's really this memory system for AI that keeps that full fidelity of your memory. So uh, the analogy that I always like to use is with AI models today, your memory is like asking you to recall when you were 1 year old. Things are very fuzzy and foggy, right? But with Clued, if you were to recall things when you were 1 year old, you retain that full fidelity image uh, and awareness of basically what happened during then.
That's
So
That's a
yeah,
fantastic explanation. And when you put it like that, it makes sense why there needs to be something like Clued, especially as we just advance and AI becomes much more intertwined in the world that we live in. Like, how does Clued like do that from a technical side? What are you guys doing to allow Clued to have? I'm assuming you're going to go on and say Clued allows you to have just larger context memory windows, and it can remember all the stuff. Like, how do you guys achieve that? And maybe correct me if I'm wrong on that.
yeah, sure. So we store the memory firstly, and we actually run through a couple of layers. So I won't go into too detail because it might be a little bit too technical. But essentially,
Okay.
we segment your memories into a couple of categories. So we have, pardon the language, but episodic, semantic, procedural, self-model, etc. So essentially, it groups them into things that you encounter every day. We score and we weigh them to a certain degree of importance. We link them as well, which is what I call memory ancestry, but I can talk about that later. And we, yeah, we essentially we link all of them together. And one of the things that we do is we introduce this thing called a decay. So we built this whole layer modeled after the human brain essentially. So I'm not a neuroscience expert, but I actually, because of Clue, I went to read up and then tried to understand a little bit better. But the human brain is programmed to forget things. It's natural. If you have bad memory, it's not because something bad, but because the brain is actually just filtering out noise so that you keep, or rather you remember things that are important. Because if you're going to remember every single tiny detail in your entire life, I think you'll probably just go a little bit crazy over there. So what we do is, yeah, we decay the stuff that are deemed not important, but we keep the ones that uh, are important. And then what we do is we actually link them up, which is what I call like a memory ancestry. So you can actually kind of trace why, using an agent as an example, why your agent made a certain decision. So every memory links back to what it caused it. You can think of it as a kind of a Git versioning problem for AI decisions, essentially.
So I guess my first thought here is like, why aren't the big AI labs doing this? You have this idea that everyone knows it's an issue, right? Like, why are you doing something that they can't? Or explain that to me.
So firstly, if they want to, they definitely could. If tomorrow OpenAI decides to go all in on this, then I'm pretty sure they will make much further improvements than what I've done. But I actually just published an article, I think a couple of days ago, and this is my thesis, right? Is that I feel it's purely profit driven, because with going back to the context window again, right? How AI models or the tech companies they charge you today is through tokens. So the more tokens you use, the more expensive it's going to be, right? So say your agent has like 500 conversations, and that is approximately, let's say, 200,000 tokens worth. So when you are asking your AI agent or your model a particular question that's buried in that 500 conversations, you actually have to send all of that 200,000 tokens into the AI model. And using GPT-4 prices, for example, that equates to about $6 to $12 per call. But the thing is, all that 200,000, or rather that 500 memories, right? Not all of them are actually relevant, right? I could have memories about, me uh, liking, dark mode. I like anime, for example, but I'm asking something about, trading strategies, right? So the thing with Clued is that we do the work before it hits the model. We search through your memories, and going back to what I mentioned about memory ancestry and scoring the weightage, we actually find the 10 to 20 nodes that are actually the most relevant, and we just inject those. So from a cost efficiency perspective, instead of sending all 200,000 tokens to the AI model to process, Clued actually does the filtering for you and send maybe, let's say, 2,000 tokens. So that's like almost 100 times lesser. And that's, I calculated that's like less than, or rather about a cent per query, compared to $6 to $12 if you're using GPT.
So how does this work? Do you plug Collude into your LLM and it does this for you automatically, or like I don't know, what's the flow look like with that?
Yeah, so it's basically an infrastructure layer. So today you can install Clued via uh, going to be technical again, but via npm install, or essentially if you have an OpenClaw agent, right, you can just point them to the Clued's website and get the agent to install it by itself. So then Clued will be sitting as a layer on top of between your bot or your agent and the AI model or the LLM model, and Clued will basically help you to do the filtering. And at the same time, as data gets transferred through and fro, Clued is that filter, and we actually capture all those memories. Another thing that we do as well is that we actually hash the memories and store these hashes on Solana chain as verifiable proof. So the reason why we do that is because um, I strongly believe that with knowledge, um, there is going to be a demand coming up where people want to verify whether your knowledge is legit, how you get this knowledge, and why you made certain decisions, for example. So, going back to a trading setup, for example, like you want to know why your agent made this trade, right? And you can actually search it up on the chain itself. That is tamper proof on, yeah, the agent made this decision because of this, because of that, because of etc. 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 So yeah.
That's this is fascinating stuff, and I'm really fascinated. I think specifically how you've modeled this off of like the human brain. I've seen projects try to do this, but I'm like going through the website and it's all like your brain does this, your brain does that. Like, what was the idea behind? Hey, let's just take the human brain and try to model an AI system off of that.
Yeah, I mean, today the human brain is probably the most complex, sophisticated, thinking machine out there, right? So even with all the advances in AI and stuff like that, I still feel that nothing comes kind of close. Debatable. Some people might disagree. But yeah, I just felt that that would be a great starting point because when we talk about memory, it's something that's so abstract. Like where do we even begin, right? And we have the best model out there, which is us, our brains. So that kind of led me down that rabbit hole. And thankfully, I'm quite blessed in the sense that there were a lot of research papers that were coming out you know, last year, late last year, Q3, Q4 last year, that was actually talking about this. So yeah, I kind of adopted that, and it kind of went away. And interesting fact is that um, Google Gemini, they actually just launched a memory pack as well, a memory skill. I think about 2 weeks ago, and it was actually kind of based off the same concept of leveraging on how the human brain is architectured into it. So I'm glad that it kind of validated the approach as well. So yeah.
So you mentioned that one last like technical question that I have, and maybe we can go into some other aspects of the project. But so you mentioned Clued sits on top, is like a layer on top of the LLMs or AI models, and as data comes in and out, it kind of like either memories decay or memories are stored. And you mentioned this aspect of using the blockchain to, I don't know, store memories, or explain the blockchain component of that a little bit for me.
Yeah. So essentially, we are storing not the memory itself, because then it's going to be public. Nobody wants to, or rather, I wouldn't be comfortable having my memory being open up on chain for everyone to see, right? So
Mhm.
what we actually do is we hash the memory. Yeah, we hash the memory SHA-2568, and we basically store that hash as a memo on the chain itself. So every time it signs a transaction to the chain, storing it. And essentially what this does is in the future, if let's say you want to verify a particular piece of the memory, like using the trader's example of like, why do you do a certain trade? All you need to do is to just retrieve that hash. You can decrypt it, and then you get the text contents essentially.
Got it. Got it. Okay, that
Yeah.
actually makes a lot more sense here. I'm starting to kind of like put this together. I'm very interested in AI, but I'm still a smooth brain degen at the end of the day, so I have to make sure I put it together in a way that I can understand. But you did a perfect job, so thank you so much for that. I think we also wanted to talk a little bit about like the adoption side of this. Like, who do you see using this? Have developers already picked this up? What does that look like?
Yeah, so we had over 5,000 downloads since I went live. So I started building Clued or started designing Clued back in August, September of last year. Um, Started building behind the scenes and actually start and only went so called live on X uh, only in January. So in January itself, we already crossed 5,000 downloads. We have about 500, and last count is 560 active users that's actually using it right now. Majority of the cases are actually in trading. So it's quite interesting, and I just wanted to share. Someone's actually using it for poly market trading. So
Nice.
how
Wow.
it works is that, uh, and this is also another topic. I'm sorry, I could get a little bit excited,
No,
but
no, please.
yeah, with memory, with with memory, we are actually enabling our agents to learn, right? So we always talk about agent self-learning and stuff like that, but how do you actually learn without having the memory? So what a lot of people are doing right now on the poly market trade is that um, the agents actually remember. For example, if you feed an algorithm, the agents actually remember things like, for example, last time there was a Fed rate decision, the odds shifted 20%, for example, in the
Mhm.
final hour, right? Or every time a certain journalist tweets about an election, the market overreacts by 5%. Example again, and it corrects within 30 minutes. So, we can actually take that and we actually reinforce the algorithm that you put in through memory. So the agent doesn't actually just run through an algorithm and static, right? It refines the algorithm based on what actually happened, and it remembers what signals were noise and which ones, I guess, printed, right? So which markets behave like the previous one, which patterns held, etc. So yeah, and this kind of brings me to another point as well, which is an area that we are going to be looking at as well. Is essentially a knowledge marketplace. So think of it as a global library. So agents can actually share their memory, share their knowledge. And when we say this, it's not just a skill. So you actually share the experience, the mistakes that you've learned, that you committed, and how you tweak and adjusted it into a more, I guess, cohesive kind of a memory pack or skill pack, right? So your agent figure out something about how sports market behave. You can actually sell that, you can trade that, and we are going to be using Clued as a token for that.
Very nice. I guess that's another. So that's one kind of utility. Like, tell us a little bit more about like any other kind of economics that you might have around the token itself.
Yeah. So besides the trading on the marketplace, right now we are, and I'm still trying to iron out the tokenomics piece. I'm not a tokenomics expert, but we are going to be using Clued as well as the currency to store your memory, to retrieve the memory as well. And essentially it becomes like the knowledge slash memory currency in that sense.
Interesting.
Yeah.
So I want to pop in here and ask about this because I see a lot of tweets talking about your benchmark numbers and how you like drastically can improve some of these. Again, smooth brain, non-technical guys. If you're talking to that cohort of people here, like explain some of these benchmarks and how Clued is greatly improving these models.
Yeah. So two key benchmarks. One is your hallucination and another is your retrieval accuracy. So I'll just quickly share about the hallucination part. So hallucination, for those who might not be too familiar, is when your AI agents actually cook up something that is non-existent because it's forced to give a response to you. So just to give you an example, the other day I was installing another OpenClaw agent. I'm installing a ton of them. And I asked the agent to install Clued, right? So it went to the site and it actually said that Clued was a legal AI legal assistant, essentially.
Okay.
And I was like, where did that come from? And it even has like, for monthly price subscription, it's $30 and stuff like that. So it basically hallucinated a whole story,
Just
a
made it
whole
up.
product. Yeah, it just made it up. Yeah, exactly. Because it couldn't find the exact information that it wanted to. So with Clued, and this is a double-edged sword, we made it so that if there's a certain confidence level that it's not sure, it would just say, I don't know, or I can't find it, rather than try to cook up a story. So the downside to that is that there's this other metric that we call the omission rate, where the agents just say that, like, I don't know, I can't get the answer for you. So our omission rate is higher than I would say it's actually at the mid tier. So it's at about 30%. The average is around 26, 27%. So we aren't too bad, but our hallucination rate is actually 2%. So to put that into comparison, the next best solution out there is at 15%.
Wow.
So
Wow.
yeah, if you scale this up to hundreds and thousands of memories, especially you're doing high stakes stuff like trading and stuff like that, you wouldn't want your agent to hallucinate certain market actions or events that hasn't happened, and that kind of influence the strategy and algorithm, right? So yeah, we rather the agent say that they do not know than cook something up and affect that. So that's that. And on the retrieval accuracy piece, we are actually in the top 1 percentile. We are 88% retrieval accuracy. So this is something that I think it can still be improved. The first spot, it's actually at 96%. So there's still probably some way to go there. But every time when we improve something, something else has to give. So we are trying to find that sweet spot. But right now, based on benchmark for like I guess half a year project, I would say that we are placed right at the top end of solutions out there right now.
So you guys are doing, so just correct me if I'm wrong here. When you talk about retrieval, the retrieval benchmarks, retrieval is like fetching data.
Yep, fetching the data.
And you guys are in the top 1% as far as your
Yep.
benchmarks versus all AI models.
Yeah, exactly. And
Wow.
another point to add to that is that if you recall the part about how we do the retrieval as compared to other people doing the retrieval, we do it at 88% retrieval accuracy at a tenth of the cost, because we are able to do the filtering and pulling out whatever that's the most relevant and then querying through it, rather than searching all 200,000 tokens like I mentioned in the example through that. So we are doing it like a cent versus up to $12 if you're using GPT-4.
This is crazy. I love seeing the benchmarks because it gives you a real way to measure this stuff, and it's impressive what you've done in half a year. So congratulations. You should pat yourself on the back for that. I think the question everybody's asking, and this is like a big blue ocean market. What's the TAM on this AI market? What's the TAM on something that you're working on here, or what you're working on?
So the addressable market right now, it's if I get my numbers correct, in 2025 it was 9 billion, but it's targeted, or no, sorry, it's 6 billion. So in 2026 it's going to be 9 billion this year, and then by 2030 it's going to be 33 billion. So basically it's growing at a CAGR of about 39%.
And this is the addressable market for agent memory, or what's
agent memory? Yeah,
Okay.
just agent memory. So this is something that is I've also talked about this quite a lot on how it's really underserved. because most of the, I would say 99% of the funds that the big tech is putting in is to make their models more intelligent, making it faster. But if you look at the fundings from the memory players last year, it's like less than 100 million. So, it's like, it's less than a rounding error in total in the overall sum of the game. So yeah, the broader AI agent markets it's growing at an exponential rate, as we can all tell. And I feel that memory is really a foundational hygiene kind of thing that all agents would need, right? So to one of your earlier questions in terms of who is this applicable for and who can use this, basically anyone that's running AI or AI agents essentially. So if you're running a video generation content kind of thing, hallucinations might cause you to generate something that's wrong, right? That could be application for Clued. If you're trading, I kind of gone into that as well, and so many other things as well.
Very interesting stuff. Can you talk us through a bit of the tech stack here? Venice AI is one we've been super interested in recently. I just love their private system and the way they're also offering like the VVV tokens for staking for compute, like for lifetime. Really cool stuff. Can you talk us through the tech stack here and who you're working with, what you're using exactly?
Yeah, so Venice is is a product that I really like as well. And when Clued launched, I think one of the first integrations that we did was actually immediately with Venice, and that is because I'm also a huge advocate for data privacy. So right now, just quickly on the privacy part, that the memories, the content that you generate through your ChatGPT, your Claude, all of those kind of don't belong to you, right? They all kind of sit in the respective company servers and stuff like that. They decide what to remember. They decide, they can delete it, they can train it, and you kind of have zero control on that. So, you early in the stream, you guys talk about sovereign memory, right? So, sovereign memory really means that the memory belongs to you and not the model itself. Venice has already built such a capable infrastructure in place that it only makes sense for us to leverage on that. So, our inference layer, so it actually include the part where we read the text and try to understand that. That layer is entirely powered by Venice. So it's completely anonymous to users. And just earlier today, I actually teased and showed about our chat interface. So moving forward, there's going to be almost like an OpenAI, a ChatGPT equivalent, but it's going to be powered by Venice. So it's going to be completely anonymous, but we are adding that Clued's memory layer on top of that as well. So you accumulate your memories, you can keep the memories for yourself, you can bring it around. If you are going to, let's say, Gemini tomorrow, you are able to extract all those memories, throw it into Gemini. You don't need to retrain it or teach it your preferences again. It will instantly remember and know whatever context that you have previously that you did with Clued.
This is really interesting because I think one of the biggest factors for sticking with a specific LLM is just having to transfer all that memory. And so you have like, these metrics on switching costs, right? What does it actually cost to switch from model to model? Because we know they're evolving so quick, and maybe Claude Code's great one day and Codex is the best option the next, right? And so switching costs kind of becomes the moat there. How can I keep users on our platform, even if it's slightly lacking compared to the others? Is that kind of the moat for you guys where it's like, look, we know people are going to be jumping from LLM to LLM. We want to make sure switching is as seamless as possible.
Yeah, so I would say memory is really the mode here overall. It's a very broad picture. But we also recognize that we had to make this as frictionless as possible. So that's also something that I'm still working on in terms of installation and stuff like that. Because if you're going to go to my wife, for example, and ask her to do an npm install of Clued, she wouldn't have any idea. So we're working on that. But the most immediate impact that we see that we can do, it's very basically just exporting a memory from one and importing it into the other. So Claude just launched a function for you to import your memories just last week. But if you look at the existing AI models today, if ChatGPT, Gemini, there's actually an area where you can manage your memories. And you see that actually the memories that they have is not really memories. They're all just bullet points of your preferences and profile. And sometimes it's not accurate as well. And you're actually just extracting those bullet points and just putting in another. Whereas for Clued, we are bringing that full stack of memory that you get it, like I mentioned again, the little details that you have, and actually taking all of that and giving it to the AI model. So, in terms of details, fidelity is going to be much richer as well. And yeah, it's just a very simple click of a button, export, and then, you're going to import it in. And just, I guess, a little additional stuff that I want to share as well in terms of the memory piece that we are doing, or memory packs, as I call it, is that we are building a way for you to selectively retrieve certain memories as well. So with your AI agents, you could be talking a bunch of stuff, but if you want to retrieve, for example, specific memory on how to bake a banana muffin, for example, you don't need to retrieve that whole, a million memories and stuff like that. You are able to just retrieve just that selective, 10,000 memories or 1,000 memories and stuff like that. And then, take that, extract it, modularize it, and, do whatever you want. Feed it into another AI if you want. You want to put it on a knowledge marketplace if you want to as well. You could do that. So yeah, that's also coming up in soon.
Love it. Love that, Alpha. We're coming up on time here. I wish we could just jump in your brain and like get everything out there, but 35 minutes isn't really enough to do that. So I'm going to ask you quickly, what's on your roadmap? What are you guys working on right now? I think you kind of just gave us a little insight to that, but maybe add to whatever you can.
Yeah. So right now, is it okay if I share my screen?
Oh, please. Oh my gosh. Yes.
We love we love demos. We love when founders share their screens. It's just a little plus sign
Yeah,
at
I
the
was
bottom.
just trying to find an opportunity to do that. So thanks for.
Oh, perfect. Let it rip.
Yeah. So this is what I'm building right now. It's a dashboard of your agent's memories essentially. And this is just one of the agents that I have. So over here, you can kind of see a live feed of, if it's processing something, what is it thinking, and
are turned into mindless vassals who now they look up to some twit instead of looking up to Thomas Jefferson or looking up to Nikola Tesla or looking up to Magellan. I mean, kids, Magellan's a lot cooler than Justin Bieber. He circumnavigated with one ship the entire planet. He was killed by wild natives before they got back to Portugal. And when they got back, there was only...
But why? $22 million in 3 fucking hours! There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every fucking time. The real question is this: was all this legal? Absolutely fucking not. The feeding grounds at the edge of the ice, nor return to the colony. Shortly afterwards, we saw him heading straight towards the mountains, some 70 kilometers away. Dr. Ainley explained that even if he caught him and brought him back to the colony, he would immediately head right back for the mountains. But why?
What's your dream? To go away.
To go away. That's right.
Do you guys want to drink? I don't understand why everybody has to be so judgmental. I understand why mom's judgmental. I think it's because she cares partially. I think it's also partially because everyone else is looking at her like, hey, Cody's just a bum. Cody's this, Cody's that, Cody's this. Cody's me, bro. Let me be me.
Yo. Nope. Boom. Get off the screen. Get on the screen. Chill.
GM. What's good? What's good? Another Friday. Trading live for you guys. Man, this is going to be a great show today. We have just some general stuff to share, market news, macro stuff, kind of trend. We got some changes in the Bitcoin projections, but today you see Dom got the glasses on. We'll be DLMMing.
When I got the glasses on, it's student mode. It's student time. It's prodigy time. It's we're gonna get cooking in some sort of mythical section that I'm not familiar with time, and that's what's happening today. Glasses coming
Brain
on.
maxing, lesson
Brain, yeah.
maxing, student maxing. You
Boom,
feel me?
boom.
Love it.
Knowledge maxing. Let's go, baby. Bear market maxing. That's what's going on today. So we're doing all that. Lots of maxing going on. I'm actually not going to wear these blue light glasses. They're a little bit, need a bit of a clean here. Down in grade. Look at that. Little camera shot in there. You can see the cam. A little bit of the setup. Nonetheless, we got a good day.
Boys. So a couple things going on. We got some, I guess we can just start running through like some of the daily, just some news, high level news. Look, Hyperliquid, I want to start there. Hyperliquid is out here doing their thing. And I have the tweet here that puts it well. Just in, Hyperliquid now trades more oil, gold, and silver than crypto. And I'll blow that up so that way you guys can actually see it. But isn't that interesting? Isn't that interesting that a crypto native project, created a product that, it's perps trading. It created a trading product, and now it's trading more traditional assets than it is crypto assets. I mean, I think that's just more of like a state of things type of thing. I mean, it just kind of shows you where we are. Jesus, look at that open interest. Oh my goodness.
Here we'll read Coin Bureau put out this tweet here. Breaking: Hyperliquid now trades more oil, gold, and silver than crypto. Combined HIP3 open interest surpassed 1.5 billion on all-time highs. The platform is processing more volume in tokenized commodities than digital assets. The 24/7 advantage is pulling volume from traditional exchanges. This is the crazy part. The crypto platform, Hyperliquid, you can finally trade your degenerate crypto tokens on perps with, leverage. But the funny part is what's actually happened is traditional finance has realized this is a better opportunity to trade over the weekend, trade these tokenized assets. And just look at this. The tokenized asset and commodity section of Hyperliquid has surpassed its crypto section. I mean, that's insane. If that doesn't show you where we're headed, like for traditional finance rails, it's becoming clearly obvious. And what do you think happens? You think the NASDAQ and the S&P and the Dow Jones and the exchanges don't see this? Traditional finance exchanges don't see this and start shaking in their boots a little bit? They got two options. They either capitalize on it and they get their foot in the game and they partner with it, like we're seeing the NASDAQ doing, like we're seeing the S&P did yesterday, or they get eaten alive. Same thing with banks and stable coins, these stable coin rails that we're seeing. But really, really great thing to point out, Chill. I mean, it's like, this is wild. In other news on that same kind of level here, stablecoin supply on Solana has surpassed 17 billion, hitting a new all-time high per Atremus. And you can see here, I mean, this is the chart, the stablecoin chart, March 13th, 2024. Well below 5 billion. I would say that's more like $2.5 billion in stablecoin volume. Today, just 2 years later, we are at, $17 billion in stablecoin volume. Again, continues to grow. This is something you guys need to pay attention to because these stablecoin rails are coming. And we're doing this new little segment, guys, news in 5 minutes. We're going to try to stack up all this news here at the start of these streams and get it to you in a digestible format here. On that same front, CoinDesk made this post here. Coinbase launches stock perpetual futures for non-U.S. traders, offering 24/7 exposure to U.S. equities, including Apple, Microsoft, NVIDIA, the S&P 500 ETFs with up to 20x leverage. Okay, again, we're seeing it. Hyperliquid's making all this money doing it. Robinhood's trying to get into it. Okay, it's only natural that the Coinbases, the OKXs, the Krakens get into it, which we're seeing happen. Again, Kraken acquiring X stocks, partnering up with the NASDAQ, OKX having 10% sold of OKX for $25 billion to the parent company, ICE, of the New York Stock Exchange. Okay, it's happening. It's coming. The proof is in the pudding. Justin, Kalshi prediction market raised over $1 billion at a valuation of a $22 billion in their latest financing round. Again, crypto rails. We all know about prediction markets, but it's coming. They actually, you see this is kind of like a hedge, right? Kalshi put out their $1 billion reward is if you hit your March Madness bracket, which, by the way, lots of busted brackets yesterday, some crazy games. Duke went into overtime, UNC early exit. So it's been a crazy start to March Madness as expected. Some good stuff. But Kalshi raised $1 billion at a $22 billion valuation, which I believe is nearly double their last raise at $12 billion, I believe was the last time I checked. Probably significantly higher. Maybe I'm just not paying close enough attention. But again, crypto rails continue to dominate. On that note as well, Bags announced that they won the Crowdfunding Innovation Award in 2026 for the FinTech Breakthrough Awards. We're grateful to be recognized amongst industry leaders, including MasterCard, Capital One, Intuit, Lending Club, and MoonPay. This award is a testament to the hard work of our team, and more importantly, the creators, builders, and traders who made this possible on Bags app. We're just getting started. So again, congratulations to Bags winning the most innovative crowdfunding for this 2026 FinTech Breakthrough Ads. Super, super cool to see. Again, crypto is breaking in. People see that there's like lots of benefits in the traditional world, right? Open source actually has an angle now to make money.
So let me jump in here. And I'm going to share my screen so that way you can see this, because you just talked about all of these things happening, right? Hyperliquid adoption. We talked about regulation, banks coming in. Like, we talked about the partnerships earlier this week with Hyperliquid and NASDAQ, with Kraken and or Hyperliquid and Trader and S&P 500. Kraken and NASDAQ and all these, we see all these things happening. And I think the founder of Blockworks, he puts it well. He said the concept of a bull or bear market isn't mapping out very neatly to crypto right now. In 7 years of hosting DOS, the yearly conference, he says, we've never seen higher attendance during a bear market, and this year will be our biggest by far. Certain sectors can seemingly raise at any valuation. Stable coins, we just talked about the stable coin volume on Solana. Kotu putting 1 billion into Kalshi. Dom just talked about that as well. While other sectors slowly bleed out. Dispersion is the trend, and it's only getting stronger. So I guess my question is, we're seeing all of these things happening on chain, where are all these things happening in crypto, where there's adoption everywhere, there's tokenization everywhere. But what does that mean for like traders? Dom, do you think traders just get left behind here?
No, I think traders adapt or die, man. This is what you do. This is how business works. This is how innovation works. You have to adapt or die. And so if traders don't adapt, they're going to die. And just like this, that's like kind of the story as old as time. This entire cycle has been different to the previous cycles. There was no alt season. There was no blow off top. And so what happens? A lot of traders got chopped out and left behind. So no, same situation here. You just got to adapt.
Got you. And I mean, this comes at a pretty weird time as well. We talked about yesterday we talked about some of the stats with the trenches, right? And I even put a post out, I believe it was last night, but we talked about this, where 27,000 tokens were launched in the last 24 hours. Only 0.01% of them are actually profitable to trade. So it's truly a casino. And when you compare that to the number of traders on chain, you see that that the number is literally just bleeding out. It looks like a bleeding, dying chart. Could it be a bottom? Potentially, but the reality is there are no new traders. There are literally you're competing against deployers, serial deployers, bundlers, copy traders, copy trade farmers, I should say. And these just aren't the optimal conditions to trade. So I just kind of wonder, where does this all lead? Like, where is the opportunity for us in markets? And I pivot to this chart so we can transition into our macro section here. But I told you guys, I'm looking probably for the S&P to turn over. Maybe it does, or I should say maybe it doesn't. Maybe we see like a leg up here at some point. But if we break this low for the S&P, it's lights out. It's lights out. And so when stocks are correcting, when Bitcoin is correcting heavily, when we see gold and silver as well are tumbling. Um, where does a where does an on-chain trader position himself? Like when we have access to all of these markets, I think the only logical thing to do is like, all right, prepare some shorts. You know what I mean? In a bull market, long your longs, but in a bear market, just long all resistance. So I guess with that, we can kind of pivot a little bit here to the macro segment if you don't have anything else, Dom.
Yeah, let's do it. So yeah, S&P's roll. What is this? Dow Jones here, Nasdaq, S&P. What is this?
This is S&P.
SPY.
Yeah. Yeah. Daily cycle low incoming. So it just looks like it's about to, it's about to either breach the low or bounce. But in my opinion, if we don't see these things resolve with the wars, then I think we're probably headed lower. The last thing I'll cover real quick here on the breaking news segment was in regards to the central banks, their probability of hiking rates have now gone up. And we saw the Kobisi letter talk a little bit about this here, and I'll pull up the tweet. This just recently came in just this morning. The Kobisi letter says the market now sees a 50% chance of a U.S. Fed rate hike by the end of 2026. And remember, just months ago, everyone was talking about how Donald Trump was going to hire this new Fed chair. This new Fed chair is going to cut rates. It's going to print money. It's going to be good for central banks. But the homie here, Fajal, he actually says it really well. He was on a podcast with Forward Guidance, and I'll reshare my screen so you guys can actually hear the audio here. But just real quick, he talks about basically how central banks are stuck. Here's the clip.
It just seems like how central banks are set up to react to an oil supply shock. It's so difficult. And this is even like a dual mandate central bank. When you get to look at the other central banks and how they're reacting to the situation, a lot of these are single mandate central banks. So all they care about is inflation. They don't have a mandate for unemployment. So when they see inflation go up, their framework are basically forced towards them with a hiking bias. So you can see like the Fed is, yes, it's come back a lot in terms of the number of cuts, but we're still on net. Like we're not pricing any hikes anywhere right now on the Fed side of things. When you look at the ECB, we have gone from pretty much flat towards almost 2 hikes over the next little while here. Bank of England today had their meeting, and it was a huge surprise. And this isn't updated in this data yet, but they were priced to cut at this recent meeting today, and they surprised by holding flat. And this really just shows how difficult and how frozen these central banks are, where they're at the whim of inflation. They can't think in those second orders. And us as market prognosticators can be like, oh, they should be doing this. But the fact of the matter is, like, they're mandated by laws and frameworks to be reacting in a certain way. So you can see this in the Bank of England. Like,
so that's kind of the main part of the clip there. Essentially, what he's saying is these central banks, they're because of laws, their framework, their regulation, their regulatory, their regulations, they need to react in a certain way. And so, if inflation is going up, then they need to be hiking rates. And what he's saying is that might not be the perfect solution, but just because of what's going on with oil, and because that's causing the risk of a higher inflation, they need to start positioning themselves to hike rates. And we all know that when rates go up, prices go down. Bitcoin starts to tumble and things of that nature. So just a headwind for us to keep in mind as we move forward in markets and as we discuss this next macro segment, because again, you got to start top down to see how these things will affect price. So let's go to Bitcoin, because my sort of I'm seeing something else with Bitcoin. So I'm still a believer that we will hit these lower targets, right? And we've talked about this many times this week, but briefly, I'll just talk about the dynamic liquidity heat map. We already see the point of control is here at 58K. Basically, sub 60K is a target for myself. The only thing that's the possibilities, or I should say the probabilities, are shifting in my opinion because of this positioning we're seeing with central banks, as well as kind of what we're seeing on the chart. Let me see here. We are actually holding this trend line, right? We're holding this trend line on the chart. And let me remove some of this stuff and zoom in a little bit so you guys can see it. So again, we've hit the part of the liquidity map. We've kind of grabbed at some liquidity, but ultimately sub 60K is still where I think we end up at some point. But what's shifting right now is when that happens, because I'm seeing that we're holding this trend line. Price action looks kind of like strong here for a move higher, but my target high is still 80K right here. So if we go up, I'm still expecting a rejection. I'm still expecting us to head toward that lower area in the green box, or we could just dump off and head right straight there, right? But I think what the market is showing right now is that it wants to go higher first. It wants to really fully trap bulls, and before it dumps it all the way down. So that's something that I'm kind of looking for. If you saw my tweet earlier today, you saw that I talked about a generational short opportunity that would be up here at 80K. So this would be my max short opportunity here. Essentially, what I would do, I would cook on chain on the way up. I would short on the way down to cook on perps, and that's how I would be profitable from now until a potential move to 80K. So I'm a fan of taking advantage of every rally, right? You have to respect the pumps. We said that earlier this week. Josh mentioned that you have to respect the pump, right? And so if the pump is coming, I'm going to make sure I take advantage. I'm going to position in tokens on chain. I'm going to maybe take some longs, and we'll talk about some of that. But again, just kind of having an overall view of where we're headed and being cautious and not drinking the juice, right? Not drinking the Kool-Aid and caving in, but just being aware of where we are.
Look, bro, I mean, it's people say it's cliche, but the trend is your friend. And it's one of the most true things you can do as a trader. You trade the trend until it tells you otherwise. And the only way it starts telling you otherwise is when the trend breaks, starts heading the other direction, structure breaks. And so as a trader, I've measured my hit rate, and this was mostly in the past, I would say, when I was trading for firms and stuff. When I was journaling everything, my hit rate was 10 times better. Maybe not 10 times. I'd be hitting at like a 40%, 50% trading against the trend. And it bumped it much higher, 60, 70% when I was trading with the trend. So you have to be pretty militant about understanding how to trade. And if you're trading the direction the market's going, you're likely going to do a lot better. So look, bull or bear, you just have to trade to your strengths, right? So trend is your friend.
Yeah, I think that's a great point there, Dom. That's a great point. The trend is your friend. And right now, that's the trend that I'm seeing, right? Where we're making higher lows here, higher lows here, higher lows here. So, I mean, could we just potentially just bounce in this area? That seems good probability. But just because we could be pumping in the immediate future, like the next few days or maybe the next week or two, doesn't mean we should forget the overall big picture, right? Know that these lows here still need to be taken. All these blue arrows that you see on the screen, they all need to be taken. And honestly, we probably might need to add another blue arrow here, right? Because now that low needs to be taken if we do catch a pump.
I mean, there are a few things you got to look for, right? So this is order flow, right? The uptrend, I guess you're looking at right now, this is just order flow. Orders are going up. But when you actually zoom out and you look at the entirety of the leg, where we originated from and where we went to, right? Cause and effect, we're still in that downtrend, right? So order flow is trending up on the short term, but we're in the downtrend. And until we get a meaningful break, you can't really say otherwise, right? So yeah, you see that leg up from 96 all the way down. That's, I guess really what's holding structure. Now, that doesn't mean wait to go long until we break that and, confirm over it. I definitely wouldn't do that. But, if you're in an order flow long here, you have to be wary that once you get up to testing higher points in the broader leg, when you zoom out, you're gonna, potentially be met with some bear, that's where you make it or break it. It's either going to confirm up or it's going to break to the downside. And so you have to be cautious about that.
Yeah. So I think that's just good to be aware of here on most high time frames, monthly, right? Downtrend, weekly, downtrend still, 3-day downtrend still. Now, as you get, like Dom said, to these lower time frames, we could have a local uptrend, but the overall trend is still down on most high time frames. So just something to be aware about. That's the overall view here on Bitcoin. Like I mentioned, if we rally, you look for outperformers, you look for something You look for something to catch on to. If we go lower, you look for something to outperform. What outperforms Bitcoin to the downside? Maybe Bitcoin dumps, but that dumps less or it holds up, right? So the 4 assets that I'm looking at right now are Fartcoin, number 1. Just because it's at the top, not it's like number 1 on my list, but it's just at the top of the toward my list on my watch list on TradingView. I'm still looking for a move into this like 18-cent area. It may or may not want to go all the way down here, but let me just draw out my green box. And actually, instead of a green box, what I'll be doing is setting an alert here. I want to see this trade below 19 cents to look for longs in that area. But yes, I
So
want to see us.
help me understand this. You're trading
Yeah.
Fartcoin almost like a leveraged bet on Bitcoin, right? So if Bitcoin goes down, Fartcoin's going to go down, 2x to every 1x Bitcoin goes down. If Fartcoin go, and I'm not saying
Mhm.
that as an actual number, but I'm just saying generally.
Yeah.
And if Bitcoin goes up, 50%, Fartcoin goes up 100%. Is that how you're looking at this? Like, I'm assuming if Bitcoin's rejecting off of 85, you're going to be going short Fartcoin with that as well.
So, what I like to do with altcoins, if I'm going long or if I'm going short, I'm probably doing it on Bitcoin mostly. What I like to do with altcoins is look for outperformers. In a bear market, it's really easy to look for outperformers because everything is dumping, right? But if something doesn't dump as much as Bitcoin, that means it's outperforming Bitcoin. Or like we saw with hype, for example, all this time, Bitcoin price action has been dog water,
What a
but
chart.
but hype has been holding up really well. So if I'm going to eye a long on anything, it's going to be something that's outperforming. And in this case, it's Hyperliquid. And so that's one of the 4 assets that I'm looking
Now,
for long setups
before you
on as
switch
well.
up on Hyperliquid, I
Mhm.
want to compare some stuff, right? I want to compare Hyperliquid to Robinhood price action and Coinbase price action because Hyperliquid's now we've seen taking a meaningful chunk of traditional finance in terms of trading volume. So is that going to dig into Robinhood's offering? And then Coinbase now is trying to get into that as well. Is that bullish Coinbase, offering these 24/7 equities? So look, you see the Hyperliquid chart. Anything you want to note on that before we jump to the other ones?
I mean, Hyperliquid is it's reached its true 0 to 1 moment, right? Like, it's at this point, Hyperliquid is now eating the market share of all these traditional platforms. So yeah, no, they better look out. I think they can try to keep up in certain ways, but Hyperliquid has the UI UX down and it has the offering down, and so yeah, it's something worth noting there.
Okay, and let's see how's that compared to the hood chart because the hood was down. Yeah, Robinhood was down like 71. Yeah. Okay, so it's looking like it's going to roll over here.
Mm-hmm. So yeah, hype is outperforming Robinhood. And I can even
Pull up
look
Coinbase
at
maybe.
uh
Coin.
it's a coin. Yeah, let's
Just
look at
wondering if
coin
that
real
got a
quick.
bump off the news of the trading here.
I mean, I guess it looks good for a bounce here. Right?
Coinbase
Like,
has also been historically kind of a barometer of the broader crypto market, right? So again, if crypto in general is doing good, Coinbase is, of course, a benefactor of that, being one of the major centralized exchanges. So I guess it did get maybe a little bump. I'm not sure if you could attribute that to the 24/7 equities trading. I know they have started opening up stocks prior to just yesterday. So
yeah.
interesting.
So looks good. Looks interesting. So let's actually real quick. We have a few minutes until our next segment. We have the LP Army joining us here today to teach us a little bit about DLMMing. You guys have heard us talk a little bit about that all week. So we're gonna get the full lowdown here, and they'll be coming up here in the next few minutes. But just to wrap up this segment, so four tickers, 4 tokens that I'm looking at. We talked about the first. That being Fartcoin, looking for a bounce. I already set an alert there. See if we can get a long setup in this region here, and I'll draw my green box. I want to see if I can get a long setup in here. That's number 1. Number 2, we talked about Hyperliquid. It honestly already looks like it's curling a little bit here. Like that reminds me of that a little bit, or even that. So it actually looks like it's about to curl up again for a move higher. So Hyperliquid, looks absolutely phenomenal. I'll keep an eye on any setups on that end. And then lastly,
Generational run, truly, for Hyperliquid, just in terms
100%.
of numbers, metrics.
Another generational run loading here is Tau.
Mhm.
I don't know, you guys saw that, Chamath was talking to the NVIDIA CEO about Templar and Tau. You can't. That's basically it there. But basically, Chamath is talking to the NVIDIA CEO Jensen Huang.
Jensen Huang.
About Templar and how it was built using distributed GPUs. And that's all on Tau. Yet Tau hasn't really reacted. It's come off this low here. I've noted every time went below 215, it's basically seen these hard bounces here, and here. So it's seen these hard bounces, and now it's breaking out of a multi-month downtrend. I would even say a multi-year downtrend, if I'm being honest. And so I think that's important, especially with everything. So I'm actually like,
Great
I
looking
think
chart.
this is
It's
good.
completely
It's good for
traded
a
better
long.
than it's completely traded better than most altcoins, traded better than Bitcoin. Like if you've been long Tau, you would outperform Bitcoin as of
Let
the last couple of years.
let me see here, just real quick. Yeah, it looks ready to outperform Bitcoin. Actually, holy,
Well, this is
this
you.
looks like a
This is Bitcoin. Okay.
yeah, yeah. This is Tau versus Bitcoin. This looks good. That looks good to me. That looks good to me. But yeah, looks ready to outperform. And then lastly is Zek. You guys know, I've been keeping an eye on Zek, bouncing on the 0.786 key level on a lower time frame. It's broken out of this multi-month downtrend, as you can see on this chart, and it's still within this previous range that this previous range that it's established before. But I'm again going to be looking for some lower time frame entries on this. I might even have to go down to the 1 hour to see when this thing can actually start reversing. And actually looks like it's in the midst of doing a little something here right now. So that's the macro segment, guys. Those are some things that I'm watching. That's the overall view of where Bitcoin is headed, as well as some tickers that I'm watching, on the leverage side. Lastly, I think we have the clip. I would love to play that. And Dom, I think you have that preloaded. You can intro that.
Yep. Okay, so this is just a tweet from Crime. Give you guys a little taste of what we're going to be getting into. We got two goats. I think you guys have seen them all. If you're in the Met LP Army, you guys definitely know about these guys. So we're excited to get the 0 to 1 basic beginner guide here. But I'll prep the show with this tweet and video from Crime here. He said, hopefully you're starting to identify where the meat of the move opportunities are on some of these charts. Granted, it is way easier to spot them in hindsight to see what a good DLM play / range would have looked like. But hopefully you can see that there, as time goes on, a lot of these plays become less great RR to be a part of. I'll just play the clip here for a minute or two, and then we will transition.
Usually, my strategy is not involved on these pumps on the way up. Some people do LP in a way where they play it tight and they do tight ranges, and they set up a range here. Usually if you're going bid side, which most of us LPers only do, they only do bid side ranges. Let's say you're doing it here, it pumps up. Okay, your range down here is now not going to get hit because your liquidity is just sitting here, right? So instead, people might, after price pumps up, they might set up a new range. They get some action here, it pumps up. But you can see how every time it pumps up, you have to keep following it up with ranges, okay? So once you get something like this, once you set up your range, and hopefully you go wide enough, obviously, to account for this, but once you get something like this, this is where LPers really, really make the meat, or people who do my strategy of LPing make the meat of their profit, is on dips and bounces like this. And even this whole area, this was a little bit high cap of a token for me to really want to play up here. I can't remember if I played it or not. I was playing it at some point in the chart. But if you were able to nail this range right here, this is what you want to see, because I don't know if you guys are aware, when you're LPing, you want to choose a token that comes into your range and moves up and down significantly within your range. All these up and down movements over time are going to yield you fees. So on Meteora, you don't really make money, right? We want we want the coin to drop into our range first, right? But we don't necessarily make money on it going down. We earn fees when the price comes down into our range. When that happens, it starts converting our Solana, whatever Solana we have in our range, from this very first point of entry. It starts swapping our Solana to the token. We get fees in the token when it goes down in our range. When it goes up in our range, we get fees in Solana. When it goes down in our range, we get fees in the token. So we get fees in nothing. When it goes up, we get fees in Solana. So you can see how we want heavy volume, heavy volatility within our range. This is how we are able to generate more fees. Now, keep in mind, you need to have a chart that has decent volume and decent price movement.
I think that's the general idea. Without further ado, let's bring up our guests for today, Mr. Heavy Metal Cook and Crime. Gentlemen,
good to see you guys. How's it going?
Man,
Great.
It's going good. Rocking and rolling.
Crime's wearing his bulletproof vest, and I see Heavy Metal's got the Met Dobby, of course the signature hat and the Met Dobby LP Army shirt. Let's go.
Hell yeah, dude.
Let's go.
Dude, Heavy Metal, I saw you been in the gym. You've been hitting the gym lately. I love that. What you been working on this week? Arms, chest, what we got?
Oh man, I don't miss. I've been going to the gym at least, 5 days a week for probably about 3 years now. Today is kind of like arm and core day. Hit that later. Yesterday was all about the shoulders. But yeah,
Nice,
it's
bro.
it's every day, man.
Gains. It's all about the gains on and off the chart. Let's go.
Hell yeah.
Okay, boys. This is the plan today. We're trying to go. This is like beginner guide 0 to 1 here. We're gonna want you guys to explain like what the heck is LPing. How are you guys making the bulk of the money here? And then like maybe some basic strategies. We're just trying to get the viewers here to go from like what's going on to, okay, I can see the angle here and I'm liking what's cooking. So,
and
yeah.
Crime, I know you've been doing the 1 to 200 soul challenge, and that's been going well for you. I think you're at it's 190 something soul at this point. So maybe also curtail that to like how we can replicate that strategy of yours.
Sure.
Yeah, man. I mean, and
so where's the best place to start?
Well, I mean, I am like the education lead for our community, the LP Army, and we run an entire free course for that. We have a live thing that we do every month called our boot camp, but we also have something that anybody can go and do at any time, at their leisure. Is the LP Academy. And that's always available on lparmy.com. Like I said, a full course to take you from zero to hero, get you all the basics and everything. And I'm happy to show some of this content now, and just kind of give you guys like a taste of it. Obviously, we wouldn't go through the whole course, but to give you guys like some of the basics here, if you'd like.
Yeah, and I guess maybe before we start, just a little bit about you guys, a little bit about Crime, as well as you, Heavy Metal, just so we can kind of get to know the stream and the chat can get to know you guys, and just how you started on this journey of DLMMing.
Well, for me, I started out on the Ethereum chain, and it turned out that I was like a really bad trader. I was just deleting money. Ethereum, I mean, the gas fees would kill you. But I tried to be a liquidity provider, and I quickly figured out that was a rich man's game on Ethereum, because, never mind like trying to profit off of fees. You gotta make back your transaction fee. I tried out on Avalanche and didn't have a good time, and found my way to Solana, tried a lot of the different protocols out there until I found what I truly love with Meteora, and it's not just the tech, and which, I mean, obviously I'm biased, but I believe we have a superior tech, and we can even show you the why on that. But it's also about our community, right? Because our community is a little bit different than maybe some of the others that you see, because you have like here you're seeing on the screen, you've got all these posts from all these people who are out there like trying to help other people learn, like, hey man, here's my strategy, and we're boosting each other. You know, someone is like, bro, I profited $5, right? And you know, that's not a great story, right? But we're like, dude, that's coffee. Right on. Hell yeah. You never see anybody in this community saying, oh, you know, you're fucking noob, you suck, you know, you made $2, whatever. To us, man, profit is profit, green is green. And this is how we are. We celebrate our wins together. We cry together. We do all these things. So it's a totally different kind of community than maybe what you're used to.
That's so awesome. I feel like sometimes in this trading environment, people can kind of get like hyper competitive, right? Like, and it's very PvP, this trading, this on-chain environment that we're in. So it's like, you know, my buys and sells work against your buys and sells, and it feels like to be a good DLMM trader, you almost have to switch around your mindset, your entire mindset, and how you view just looking at these different tokens and assets, because it's no longer about your entry and your exit. It's really like Crime was saying in the video that we showed beforehand. It's really about capturing fees. The fees ultimately is what's going to boost your or drive your P&L, right?
Yeah, exactly. Yeah. And, you know, and this is one of the great things about liquidity providing that maybe not everybody fully understands, because, you know, when you're trading, how do you win? Buy low, sell high. That's it. Right. I mean, if you're buying high and you're selling low, you are losing. With liquidity providing, you know, token dump, cool. I got some fees off that dump. I have totally exited a position in profit even after a token just went, you know, down. You know, you can still lose. There's no, don't misunderstand, but you can totally make money off of that. Do that, and you know, I'll even show it here in a bit. Narco in the chat talked about DLMM Playground, which is something super cool that's been created. It is a 100% risk-free way for you to try the DLMM. No risk. It's just a simulator, but you can like test out your strategies and see, you know, like, hey, would I have made money here? Would I have lost? You know, what can I try differently? It's super cool, and we'll definitely show that.
So explain this to me. So the difference here is you're not trading, you're providing liquidity and taking fees for providing that liquidity, correct?
Right. Yeah. So, I mean, you know, in DeFi, someone has to put up the money for you to trade against, right? Someone has to provide that. And so that's what we're doing, is like, I'm putting up tokens for you to swap with. And we get into what's called a liquidity pool, and it's specific for the token pair. Like we're showing here on the screen, Sol USDC. You know, and you can put up just one of the tokens, like say, I don't have any USDC. I don't want to buy any USDC. I just want to put up Sol. You can do that with the Meteor DLMM. You can put that money in there. And so whenever, you know, say you buy a token out there on Jupiter's trying to find the liquidity pool for the best price. And that exists, and it's going to go out there and it's going to route it through you. And so you've got your money up, that swap hits your liquidity, and you get a fee based off of that trade.
Got you. And Crime, let me just pass it to you real quick. How did you get started in this DLMM world?
So I initially, you guys can hear me, right?
Yep.
Perfect.
I initially had a stock trading background. Like I was always interested in trading like penny stocks and like small cap stocks back in the day. So I kind of had like some background into just kind of like odd chart movements, and then entered Solana meme coins. I bought like Doge, Pepe, SHIB back in the day, but I was never like on chain on Ethereum. And then January 2024 came to Solana. I saw like Popcat ripping back then and stuff like that. And I was actually like trading on BonkBot back then. And the first like 5 months of 2024, I was like did really, really well, just like flat out trading. And then I started getting like wrecked kind of hard. I gave back like so much money in like May to June. That's when I learned about Meteora. I saw someone actually streaming it and explaining it, and I got the general like concept of it at that time, but I wasn't profitable. I didn't really understand. I didn't understand like how to position myself, and that is when I found Razer, who's another LP Army member. He was doing a challenge like I was doing, the 1 to 100 Solana challenge, and he was just providing only buy side liquidity. So like on traditional liquidity pools, especially AMMs, you have to deposit 50-50 of Solana and the token. So when you buy the token, it kind of like increases your risk, because now if the token goes down, you bought these tokens up here that you deposited and now they're depreciating. With like Meteor, it's really powerful because going one side, you don't have to put up that initial risk of buying the token here. You can instead just have a bunch of almost buy orders below the price, and then basically you're just trying to identify where the lowest point on the chart you think is going to go, and as long as the price remains above your bottom of your range, like you should be fine for the most part. Obviously exceptions to that, but for the most part, if you make the bottom of your range big enough, then you're just going to stay in. And then anyways, yeah, I got inspired to do the 1 to 100 Solana challenge as well. It took me 11 months to get to 100. We're actually at like 186 right now. I've been taking a few losses, so not quite at 200 yet, but hopefully soon.
Got it. So both of you guys, found DLMMing to be of interest to you after kind of experimenting a little bit with liquidity provision before. And I do think that the platform is powerful. From just like looking at it myself, it's so much. I used to provide liquidity for like some of the Ponzi's and stuff of the DeFi, like Ponzi times of 2021. And so I remember LPing was just, man, you really had to dig in to try to like, buy the right 50% amount and stuff like that. Back then, the AMMs didn't even have the auto 50% feature. So it was just this really confusing process. So to have a full-on terminal now where you can provide, like, for example, one-sided buy side liquidity, like it's just, I mean, to me, that's like a huge unlock. But I know that heavy metal, you had like a few, you had a deck that you can show with to explain some of the basics. If you'd like to jump into that, we definitely can. And just to kind of get things started.
For sure, man. Yeah, happy to do that. When it's ready, whenever you want to put it up.
We'll do it right now.
We'll go ahead and get that up right now.
Right.
Perfect.
So, and like I'm taking this directly from our course. I'm not going to take you guys through the entire course. We're just going to touch on some of the basics to help people really kind of understand and grasp here. An AMM, automated market maker, that's the very basic kind of pool that exists out there. And then the next level is a CLMM. So like, I mean, if you've ever used Uniswap out there, Uniswap V2 is a traditional AMM, an infinite price range. And then Uniswap V3 introduced the concept of concentrated liquidity. Okay. So it's allowing you to define your price range. And but Meteora does take that a little step further, but here's just like that visual of that. You have your traditional AMM and your liquidity is spread out from 0 to infinity. But, if all the price action is just happening right here in the middle, you've got all this liquidity out here on the edges that it's just not being used, right? It's just sitting there idle. You're not earning any fees off of that. It's just like, it's not capital efficient, okay? Whereas you've got a CLMM, see like this, you're able to focus your money where the price action is happening, and maybe a little bit on the outsides in case you get a swing. But, that's the idea with a CLMM. And, you find that out there, like, other protocols like Radium, Orca, and so on and so forth. That's what they are using, is that CLMM. Okay. Well, the DLMM takes that a whole another step further, and you can actually shape your liquidity to match your strategy or the appropriate strategy for that token. You know, you've got the spot strategy, which is like your standard AMM. That liquidity is just spread out even and flat. But you know what? If say you are more into doing stables, right? You know, you want Sol USDC or Sol in some liquid staking token, and the price is not moving a whole lot, you can totally use that curve, which focuses your liquidity right there where all that price action is happening. Okay. And that's probably one of the least used strategies, but it works. Now, and like this here, the bid ask. Okay. This is one of the most popular, and it's super powerful because it really is about, for one, capital preservation, right? Again, how do we win in trading? Buy low, sell high. So my liquidity is distributed so that most of my money is down there low, because I don't want to pay high prices for some, you know, shit meme coin, right? I would rather pay low prices. So as that token goes down, you buy more of it. And as it pumps, I'm selling more of it at a higher price. And this is how a lot of liquidity providers go in with the safety. You know, I know Crime is a huge fan of the bid ask. You know, we'll start in and maybe we're only putting in Sol. You don't have to buy that other token. Okay. You can do this just one-sided. They'll go on a bid ask, you know, and as it starts to go down, you know, you're earning some fees, and it goes even further down, you're earning more. You don't need that much of a huge pump in order to be in profit. And there's a lot more to it, but there is something even cooler that you can do with this is you can actually stack these strategies. You can combine them to do this. And like, here's a classic, the spot bid ask. Okay. So, you know, because when the price action is happening there down in the valley or the low part, the small part of your liquidity, you're not really earning that much in fees. If you think it's going to range there for a bit, you can totally add in a layer of spot, which you can see I've done that here. I've put in just a little layer of spot just so that I'm earning a little bit more fees. You can do all these things. And this is what the single-sided liquidity looks like. It's simple as that. But you can define your range, and we usually do that by a percentage. And I hope everybody's following me with this so far.
So just to kind of summarize a little bit there, and if you can go back one slide, just to make sure that I'm getting all of this correct. So you have your bid ask, which you can either, with any of these strategies, just like with any liquidity provision strategy, you can either do double-sided with, you know, Sol and token, or stable in token, or what have you, or you can do one-sided where it's just Sol or it's just the token. All right. So you have a few different levers you can pull.
Oh, now, yeah, a lot of levers.
Got you. Now, after you've decided that, now you can funnel that into one of three different strategies: spot, where there's like equal distribution across a range; curve; and bid ask. And I guess curve is more so like concentrated around like a specific price point.
Yeah.
I guess a tighter range, one can say. And then usually, the bid ask is a bigger range.
Yeah, typically. I mean, you know, you can make your ranges as big or as small as you'd like. And really, it's like a lot of it has to do with what do you think the token's going to do, or what's your risk appetite. But yes.
Could you explain to me this real quick? What's the benefit here of going single-sided versus dual-sided, where it's, you know, just Solana, or Solana, let's say Fartcoin?
Well, let me ask you this. When you're buying a meme coin, do you know it's going to go up?
Of course not.
Are you exactly? You know it's going to go down. They all do. Everything goes down. And so instead of me spending my money buying a token that maybe I bought it at the all-time high, Don't know. You never know. And it is a valid strategy. There are times whenever I think this thing is going up, it's actually running, it's pumping, and I might buy. But a lot of guys don't. They just said, you know what, I'm just going to put in my soul, and that's it. I'm going to catch the dump. I mean, it's kind of funny that, you know, the only people who are praying for a dump are the liquidity providers. You know, everybody wants a pump. Well, I want that thing to dip and range and go back and forth. And so that, because I'm after the fees, that's what I'm after. That's how I'm making my money. Now, obviously, if a token pumps, you know, all through my range and I've collected some fees and I'm left only with soul back, you know, hey, that's golden too. But, you know, a lot of guys like, we don't want to go and buy the token. We're not here for that. We're just going to put in our soul or USDC or whatever to get started with that.
But that's the point, right? There's like flexibility in how you can do it, number one. But number two, the big thing is it's shift in mindset. It's from a trader to an LPer. So what you're asking for is different. And I mean, Crime, I think I saw you wanted to kind of to jump in there. So feel free if you wanted to add anything to any of this.
Sure. I was just gonna say, so if you're not entirely familiar with like what these curves are looking like, basically the dotted line in the middle is current price, and the purple is the token in this case, and the blue is the Solana. When you're going single-sided with just Solana, it would just be blue, like HMC showed in the other slide. It would just be blue. So you kind of want to think about it in the bid ask. If you want to go back one, in the bid ask example, there is not very much liquidity towards the current price on either side. So on like a bid ask, if you're going two side here, like if it goes -2%, minus or +6%, -5%, +7%, like not much of your liquidity is really going to get hit here. So you just have to keep that in mind, as opposed with spot, right? It's all even, no matter where it is on the chart, you're going to be getting like the same fees here.
So just to jump in real quick so everyone understands this. So the dotted line in the middle is current price. The purple is token. The blue is Solana or stables or whatever.
Your base token,
also
yeah.
The height
quote
of
token.
Got it. But the height of each bar represents how much of your your total liquidity is put into the chart.
And then you can see on curve, like HMC said, not a lot of people use this one just because like you have to be really confident that it's not going to dump super, like if it dumps, you know, out of like towards the bottom of your range, if that dotted line goes super left, then a lot of your Solana is going to already be converted to the token, and you're not going to be earning as much fees. The curve is really ideal if it bounces, right? -5%, +5%, -5%, +5%. It's in that tight range, and all of your liquidity is like really close to current price. So you'd be earning a lot of fees. The danger is just that if it falls out of range, then like you're really, really in trouble.
Yeah. Someone pulled up an idea. We can show this directly with our DLMM playground.
So I have the DLM playground pulled up. So probably let's say
great.
This is Solana, right? So ideally, if you had, and correct me if I'm wrong, maybe the best range here would be like over the last couple weeks in hindsight would have been like a spot range between 75 and 100, right? Where it's just ranging back and forth. Or how would you guys play this per se?
I mean, with that one, because, you know, and here's one thing to consider. There's a mountain of liquidity out there for Sol USDC. There's a lot. You're competing for fees. And so, you know, this one, it takes a little bit more time to actually hit. But I would probably go pure spot with this if I'm defining that range, unless you really think it's going to stay in a certain area. I might do a mix of curve and spot. But Like if you go down to, or like create a new position there, you've got on the right hand side Sol USDC, and you can leave the autofill checked, and you've got 100 Sol to play with here. So I don't know, put in 20 Sol, and it's going to automatically calculate the USDC for you. And if you scroll down from here, you will see here you can define below that. Yeah, right. Below that, you can define a range. Let's just go pure spot, but you can see there below that the percentages. You know, you can bump that up or down if you want to hit the price range that you're after, right? That you want to stay in. Once you're done with that, you just
so in this example, what would you maybe set it to? Of course, hypothetically.
Let's see. Hypothetically, it was hard for me to read there, but I would say probably, what's the current price?
So yeah, this is 90 right here where my ticker's at.
Yeah.
It's currently at 88.91, and then the low of this wick is 87 flat, call it. So we'll say top of the range right here 90, bottom of the range 87, and right here in the middle is about 88.9.
I mean, me personally, if I'm doing it, I would probably choose something like between 85 and 95. Just, I mean, you know, Sol, it does that. It goes up and down, but you know, if you want to go that tight, you totally can.
So are you saying that, like, because you mentioned that, you know, earning fees on some of these larger caps a little bit more competitive, right? These have more established liquidity pools. So would you say, like, let's just say I'm a trader, I like a little risk with my LPing, I want to see some kind of decent fees on mine. I would much rather go, or me as a trader would be better going for like a mid to lower cap token versus a higher cap if I want to generate more fees quicker and perhaps maybe even with less capital.
Yeah, that's true.
Got it.
On like when you're LPing like Solana USDC, for example, you're not really LPing this for like insane fee generation. Basically, for this case, the reason you'd be using this pool is to enter or get exposure to Solana just with like a little bit of extra fees. But like I have seen some larger P&Ls in USDC Solana pools, but like in terms of like major fee generation, this is not necessary. Like the reason you use Meteora for this is so that you enter very efficiently and earn a little bit of fees on top, in my opinion.
And I mean, there's some people who are putting in massive amounts of liquidity into this, and you know they're making solid money on that. And you know, Crypto Jones here, you put in, I go single-sided spot down to $75 all USDC, treat it like a DCA. You know, whenever I am buying or selling Sol, I don't go and just buy it. I use the DLMM. Like if I'm like, I'm wanting to cash out some Sol, man, I'll go in, maybe even use a bid ask to set that up and wait for it to move through my position, so that I'm not paying the transaction fee for the trade. I'm making a little bit of fees along the way. So I'm like, I am getting paid to trade my token.
Mm-hmm. Got it. So it's almost like it in traders' language, it's the same. These different strategies they can yield the same as like if I buy a high cap, right? Like a Solana or an Ethereum or a Bitcoin, those might only move, you know, 20, 30, 40, 50%. But as I go out on the risk curve, you know, these gains are larger. These percentage moves are larger. So in a similar fashion, as you kind of go down, as you go out on the risk curve, moving from Solana to Fartcoin or from Fartcoin to a mid cap or a mid cap to a micro cap, the risk is higher in terms of losing money, but the reward is higher. So it's a little bit more,
you know, and I mean, that's the thing. If I'm in Sol USDC, if I end up with all Sol, okay. If I end up with all USDC, that's cool too. I like both of those tokens. They're great and I know that it's going to move again, right? I don't have any desire to hang on to fart coin. I want to in and out of that. So, yeah, you're absolutely right. Your risk here is what you have to consider. I don't want to stay in some meme for a long time. I want to get in, make some fees, get out, and get rid of whatever's left of that token and be in profit. You can see I have entered a pool, been in it for 30 seconds and left in profit.
Yeah. Got it. So, Crime, I love the way you explained the bid ask on the chart. I think just from a trader's perspective, like seeing how the bid ask plays out on the chart is really helped. At least that helped me. It helped for it to click in my head. So if you'd like to share your screen, or if you'd like to share a chart or a setup, definitely.
Could I, while we're switching to that, could I also ask what's like fundamentally happening on the back end here when I do set up a liquidity pool and it's ranging? Is it buying and selling? Like, how is that actually happening to where I'm earning fees? If you could explain that a little bit better to me.
Well, yeah. So, I mean, your tokens are actually being traded. So let's say you're in Sol Fart Coin, right? And you put up Sol and the price of Fart Coin comes down. Well, as that's moving through your range, your Sol is being converted into Fart Coin. Okay. And let's just say it comes down 10%. So you're now 10% down into your range. If you withdraw at that point, well, now you've got 10% worth of Fart Coin, essentially. So your tokens are actually being traded. Someone traded with you that token for Sol, right? And you collected a fee in Fart Coin. As it goes back up, your Fart Coin is turned back into Sol, and you're collecting a fee in Sol. So you get fees going both ways. Which one?
Kind of like a spread for being the buyer, right? So if I'm the only willing seller, they'll have to maybe take a 2% haircut or whatever it is in order to transact with me, and I keep that 2% as the profits as a liquidity provider. Am I understanding that correctly?
Yeah, exactly. Yeah. And profit is the wrong word. Fee
margins.
Fees. Okay. Yeah, I mean that's what you're collecting. That's your fee that you get. You have to remember that you are also dealing with something called impermanent loss, right? Because whenever the price of that token went down, well, now it's worth less, right? So that's a loss, all right? And unless the price moves back to your original point, you are in what we call impermanent loss. And that sounds so scary to a lot of people. It's also called divergent loss because the price diverged. So your goal here is to earn enough fees to, one, offset your losses, and two, be in profit. So that's the key thing that you have to remember is that, yes, you took 2% off of that trade. So that 2% is what's helping you offset the loss and be in profit at the same time.
Got it. So I think we're at a good place here. We understand the basics. We have the basics down as far as, looking at the playground, what represents, bid ask, how to provide one-sided, dual-sided liquidity. You kind of broke down what's happening on the back end as far as how these fees are generated. And I think now is just a really good time to let's put it all together and see this in practice. Sure. So Crime, I see you have a chart up. Maybe kind of walk us through, thoughts going into the trade and take it all the way through to execution.
Sure. Is it up?
Yep. Looking good.
So, again, token selection, I think like Soju said this, token selection is always going to be like one of the most important things when you're LPing, because you can cover as wide as you want, but if something just dribbles down and never gets any bounce, like you're gonna take a loss on that. But for example, I thought this token was okay in terms of the volume, looked pretty natural to me. The price action looked natural. So once it had this spike, I was willing to bid this 90% down. Usually I recommend people to go like 87%, 90%. You can go tighter than that and you'll earn more fees. But just in this market, I'm seeing things go 90%. And like, as you can see, it got pretty deep into my range. I started at 969K and it went down to 180. So pretty low. But basically what you want to think about, for example, in this pool, I went 10 sol bid ask, and I started this pool when price was like right here, keep in mind. So I'm setting up my pool now, and what Meteora is doing is it's taking my 10 Solana and it's breaking it up between a bunch of different, you can think about them technically as like limit buy orders, all the way down to 90K. And I'm using bid ask here, so you can see how these buy orders are getting bigger as we get further down on the chart, right? So what HMC was saying about impermanent loss, I just say sometimes I've started to say pool depreciation just because I think people are not as afraid of pool depreciation, just because it sounds a little bit more basic. But basically, the reason why your pool depreciates is because you set up this pool. Imagine none of this price action has happened. So the price in this example is still all the way up here. And all of your 10 Solana is now spread out between 960K and 94K. And as soon as price starts coming down into your range, your Solana is getting converted into the token. So now let's say price is down here at this little spot in the liquidity pool. Now everything above here is now converted to the token. So if you think about it, if we go back to the example of, that blue curve we were showing, when price comes down, that blue starts turning to purple. So now everything in this liquidity pool above here is going to be purple because this is the current price right here, and everything above here are basically now limit sell orders. They almost convert from limit buy orders to limit sell orders now. So if price came back up, these tokens would sell out and we'd be left back with Solana. But anyways, going back to the initial point from the very start, right? Let's say price is all the way down here. This Solana has converted to the token right now, and let's say the price keeps doing this. The liquidity up at the top of this range is not doing anything. So basically all it's doing is depreciating. So this is why your pool depreciates, because these tokens got converted from Solana to the token up at this price level. Now price is down here. This is not doing anything. It's just like holding tokens basically, except instead of them being in your wallet, they're in the range and they're basically being commanded to sell out at this price. So they're just sitting here in like price limbo because the price isn't back there. And that's why you get pool depreciation. But for an example, going back to the whole strategy, right? 10 Sol here, when it goes down in your range, you get fees in the token. So I'll get fees in Gerald on this first move. When it goes up in our range and the tokens sell back to Solana, you get fees in Solana again. And then when it goes down, you get fees in Gerald. If it gets some bounces, you might get some fees in Solana. This was a really good pool that I was in. This is why I'm using it as an example. And then we got the strong bounce. Even though I haven't been trading that well, for some reason, some of these sells have ended up being pretty decent in terms of where I get out of these pools. But you can see the power of Meteor, basically, what I tell everyone is you set up a curve like this, you enter it up here, and you're able to get out for profit and a decent amount of profit. I probably made maybe 1.8 Solana on this play, and you can see I set it up here. I'm able to get out lower on the chart. Obviously, if I had gotten out here, probably would have been like 1.2 Solana. And also worth noting, at this point in the chart, I was not in profit. I didn't check how much I was down, but I was probably down like maybe 0.5 soul here, something like that. So there are points in the chart where you're not going to be in profit, especially like if it's looking really ugly like this one was. Thank goodness I wasn't like awake to see this, because I probably would have started getting worried. But anyways, you see how going this wide really gives me cushion. Like, let's say I was trying to be fancy and I went like, 75% down or something like that. It would have gotten out of my range, and this is somewhere you really don't want to be. So just kind of a more propaganda for going wide and giving the charts a chance to play out.
So that's a really great way of explaining it. It's almost like a DCA. It acts as a DCA in on the way down, and as price moves up and down and chops inside of your range, you get fees and soul and the token. And so and that's why, chat, if you're listening to this and you're not confused, but you're feeling something different, is because it's a shift in mindset, because now you're not looking for, an entry. Technically on this chart, we entered at 9. We started the DCA at like 900K or above 900K, but we have spaced it out so well, because it's kind of going all the way down to such a low price. But you're thinking about ranges more than you're thinking about a price point as far as entry and exits are concerned. Go ahead, Don.
Now, a question I have here is, let's say I really like Gerald and I DCA down, and maybe I kept my my DLMM open here, well ranged in this whole range. But at some point I decide, okay, I actually want to hold Gerald now and just sit with the tokens I have and see that to 1.4 million or new all-time highs, whatever. What would that practically look like? As a trader, maybe I do like the asset. How do I earn the fees? And then, like, what's the best point to decide I'm going to hold these out to new ranges, new all-time highs?
This is where you can get creative. This is not something I ever get into, just because I am like really like scared and I am never entirely super confident on a token. But I was actually talking to Chill about this, because he was asking something very similar. So obviously, I think you guys understand at this point that right down here at this point in the chart, you have a lot of your Solana converted to the tokens, right? You might have like 2 soul left in your 10 soul range. So maybe 7 or 8 soul have been converted to the token. If for some reason this comes all the way back out, it will actually just sell back out of your tokens back to Solana. If it breaks up here, you're going to have 10 Solana again, and you have none of the token except for the token fees you made. But Chill was also asking me, he's like, well, technically, what if I wanted to keep the token? So let's say right here, for some reason, you have amazing insight. You can basically see the future, and you're like, okay, I know this token is going to go back up. So what you could do is you could withdraw your liquidity pool. You could withdraw all of your tokens from this liquidity pool, and you could actually, if you really wanted to, this is like not something I ever recommend to any beginners or anything, just because it's risky. But if for some reason you had the foresight that this is going to go to 1.5 mil, then you could withdraw your liquidity and set up a new range all the way up to 1.5 mil, and just set up your sell side liquidity all the way up here. And now you could even set it up so instead of having this distribution where you're selling out of a lot of tokens right here, you could set it up so this is called a bid-ask flip, kind of. I again never do this. But just so you're aware of kind of the creativity you can use is like you can now withdraw your token, set it up so you're selling out of a higher portion at way higher prices. And now if for some reason price comes up here, not only are you going to earn on the token fees, but now you set it up so a lot of your liquidity is selling out up at this price, and you're still earning fees on the way up. But
and this is what we were talking about this on stream all week. This is the key part for on-chain on-chain traders. A lot of people that watch our show, they trade tokens on-chain just like we do, whether they're ownership tokens, meme coins, or what have you. And these things have these sort of, peaks and troughs where tokens go up and tokens go down. But the way you can position yourself outside of just trading it, but from a DLMM perspective, is we usually call it when something breaks out, we call that a discovery candle. And I can even share my chart to show exactly what that talks about, what that is. But basically on this Gerald chart, right after the 16th, you see that rally. That's a discovery candle. Like all that whole price action right there, that's a discovery candle. And so what I would do is just go in and DLM my minus 90% down. But what I would usually do is I would target tokens that are already 90% down, but have the insight to say, I think this will go up. And so it's kind of flipped in my opinion. Like there you go. We talked about this. We talked about what the dog
it
doing.
actually worked out in your case.
And this is playing out exactly. I didn't have the confidence to put the DLMM trade on because I didn't want to mess it up. I don't blame you. But I think this is literally a perfect example. Is I've gotten the 90%, the minus 90% entry. I want to now, I guess, do like you said, like a bid ask flip, and now kind of set a wider range, perhaps up to like 15 or 20 mil. And as we sell out, as we go up, just kind of collect those fees, because it's going to chop around, right? It's going to chop around for a long time. And I feel like this is the best way for, if you want to just like hold a token long term, you can still earn a ton of fees. Imagine if I'm holding this for, a month or something like that, and it's like chopping around on its way up to 20 mil. You know what I mean? So I think it's just an aspect of combining the foresight of charting and trading, but also combining that with the power of Meteora and DLMMing. That's where I'm seeing this like beauty spot exists with these strategies.
So I think I'm understanding this. A traditional bid ask is going to be bulk of your trade gets filled at the lows. Your key hope is you're basically trying to time roughly when the bottom's going to be and have 70 to 80% of your position filled. So you're going to have bulk of your trades getting filled at the lows, and then bulk of your trades also selling out at the lows in that range as you peak up, just slightly into the range a little bit further. In this case, you're flipping it to where you're buying the bulk at the low and you're selling the bulk at the high, right? So say 10 souls filled at the bottom and you have 2 souls sold after 20-30% pump, and then the rest on the way up. Is that like a better way to understand it? Am I conceptualizing that right?
Yes, but in terms of like putting it into practice, I'm always too scared. I'm too scared to flip it. I just keep it like this, and then I'll exit like here, and like that's good enough for me. Like I'm not fancy. I don't have enough foresight usually to be confident in doing this, because if you set it up like this and it fades off, then like you're screwed, because you have but if you do have the confidence, then this would work out really, really well. But like I said, I don't really mess with that. I just stay in this curve, and then I take my profits on these bounces and kind of move on usually.
Yeah,
I think Darth Infernal really has a nice question that you had up there, Dom, about automating that redefining of the range. Is there a way to just kind of like automate that, like a trailing stop loss or something like that? Or is it literally, all right, close that position, reopen a new range, and would you have to kind of do the whole thing all over again?
I mean, not natively with Meteora. There's no automation there. And I can show you like what this kind of really looks like, even with another chart. But there's usually I'm using the same position, because you can withdraw your liquidity without closing the position, and then just put the money back into whatever shape you'd like. I mean, this is the bid ask flip. It's a super simple strategy. It's so effective. I mean, I know a guy in Turkey who bought a brand new car, doing only this. It's very simple. And as that thing comes down, you're getting those C's, and you may it's hit the bottom. turn around, flip it, put it back into the bid ask. And that's one option. Sometimes what I'm doing is once the token starts to get down here at this part of my range, I just withdraw just that token. And that's another option. I can leave my other soul still in there, withdraw just that token, and maybe I just put it back in as a spot instead of a bid ask, right? So it's more flat, and I don't need it to pump that much usually to be in a profit at that point. But like, here's another way to look at this. This one is like very classic. A guy, he's using a lot of his own, like charting, but he opened up a one-sided bid ask. He set a range just so only. It came down here. He earned a lot of fees on this bounce, right? Along the way, it hit what he felt was the bottom. He flipped it around. Then it ranged some more. And then whenever he was left with all soul, he exited his position, in pure profit. That's the ideal. It doesn't always happen that way. And to me, what I'm usually looking for is just, where's my exit? I don't think it's going to hit all the way back up at the top of that range. All I need is a little bit, a little bit of pump or ranging, so that I've got enough of those fees. And one thing that I'm doing, and this may help, is I actually, everyone's got their different idea on this. I like to compound my fees. So as it's going through and it's going up and down and doing its thing, I may claim my fees and put just the token back into my range, and I'll throw it in as a bid ask, so that whenever it pumps, I'm selling that token because I don't want to keep it. I'm not putting any soul back in, just that one token. So as it's going back up, I'm reselling those fees again. And like I said, I don't necessarily need a massive pump to be back in profit. I might say, okay, all right, I've made half a soul here. Looking at the chart, I don't know that it's going to go any higher. So I'm going to take my half soul, sell the rest of this, and walk away happy.
Dude, you guys don't understand. This conversation here is like making me so pumped up for DLMMing because if you guys, so here's just a broader thesis that I'm thinking about of how we like this strategy of DLMMing is so powerful. We're in a bear market. If you can eye assets that, can potentially have good price movement in the future, you can literally, as they consolidate at the lows, set that as a range, collect fees as they're consolidating in that range, do a bid ask flip into limit sell orders on the way up, and you can target a much higher range. And let's say, what the dog do in that chart, we eye the consolidation, we bid ask flip, and now we're riding it all the way up. Let's say we're targeting 20 mil. We're still collecting fees even now as the price just goes up, but it's like chopping up and down. We're still collecting fees on that. That's, to me, coming out of a bear market or like being in this bearish environment, that's like such a powerful way to kind of trade or be in this environment, but still
absolutely profitable. And there's even more ways to do it, but here's one of the, and you touched in something talking about that bear market, and this is like really cool because as an LPer, you have to change your strategies. You have to do this. We've even run competitions for our community, like share your bear market strategy. And we've got guys out there giving all different kinds of ideas and to do this. And this has been huge for some of our communities, like maybe some in Asia where, like maybe $300 is an entire month's salary, right? For me, that's just like a week of groceries. But for them, that's an entire month. It's literally changing these people's lives because maybe they made $300 in a day or 2 days or whatever. And can you imagine that? You make all that you need to live for a month in a couple hours and literally changing people's lives with this. You know, like these are some other strategies, but the one that I want to show you that's been super effective, this come from a guy in Indonesia, and it's the Evil Panda strat. Now I can't get into all the details of it, but he's picking the right tokens, and he's going one-sided soul 80-90% spot only, but he's going very wide, and he's going with really high percentage fee pools, like 5%, 10%. And so it doesn't matter if that token dumps. In fact, he wants that token to dump. Is rug me daddy, you know, and give me all those tasty, delicious fees all the way down. And again, you don't need a huge pump on these things in order to be in a profit. You know, it's like we say we cry in green, right? Because sometimes you get out and it does pump even more and you would have had more. You can't concern yourself with that. That's what gets people in trouble, is that emotion. You remove that. But this is a super effective strategy to work in these types of market. Someone asked here, where do you enter the claim fees? You know, your position is, once you create a position, it's not entirely static. You can add more to a position. You can and do it in any shape you want. You can withdraw portions of tokens. You can specify bins or percentages. It's super flexible. You can make all kinds of insane shapes. I even ran a DLMM art class once. I was doing that, just like, oh, look at this, I made a rocket ship or a race car. It totally did that. You can it's one of the most flexible platforms out there for you to fit whatever it is.
Got it. So what we're going to attempt to do here is, I'm going to attempt to put on a trade live here, and just kind of walking through all of the specifics. Darth Infernal, so the fees is also paid as token? Yes.
You get both.
As token and soul, or stable.
Depends on which way it goes.
How does
like
trading volume affect the fee generation?
Well, and Crime may have something to say there too, but you know, you got to think about this. So let's just use Jupiter as the example. Whenever someone wants to make a trade, what are they looking for? Okay. Well, number one, they're looking for the best price for that swap. Okay. But if you're at a pool where there's not enough liquidity there to facilitate the swap, you know, say the pool has 3 soul in it, and someone's wanting to buy 5 soul worth. Well, there's not enough liquidity there, so you're not going to get all of that. You might get a portion of it, but you're not going to get all of that. So you need TVL in order for that swap to even happen. Now, there is a point where too much TVL reduces your fee generation, but this is, again, one of the great things about the LP Army is that, you know, we pool together. It's like, hey guys, this thing's running. Let's get it together, because if I put in a couple $100 and Crime puts in a couple $100 and you know, 15 of my friends puts in, you know, a couple $100, all of a sudden this pool's got some real liquidity for it to hit and actually be attractive pool for the trades.
So explain that, like attractiveness of a liquidity pool. What does a liquidity pool need to be attractive?
Well, you know, again, it's number one, it's all about, you know, the best price for the swapper, right? But whenever you are, so in the case of Sol USDC, you want to go probably with one of the lowest fees out there. And we also have things, bin steps. I'm not going to go into all that, but that's basically the size of the liquidity container. The lowest fee is going to attract, especially on something that's a really high like this. You know, hype, there's 1.1 million here on screen that we see just in this one specific liquidity pool. There's tons out there, others, but this one is, let's see, a 0.2% fee pool. It's not that high, but this is a well-established token. There's a lot of stuff out there, so there's a lot more competition for it. You're also at a lower risk of this thing just like absolutely rugging you, right? It's $38 million market cap here. Whereas, you know, you're doing the latest, you know, Donald Trump, you know, goofball token that it just like some brand new 100K market cap shitter that just came out, right? I'm going to want to go for a high fee there, because if I go with the tiny fee, that thing, you know, it's going to dump. That's guaranteed. You will not earn enough fees on the way down, right? So smaller market cap, new, fresh, we're going to go with a higher fee because A, people are going to buy it anyway. And B, I need that higher fee to offset that. It's still attractive because there's not as many liquidity pools out there, plus the swing, right? So the market cap has a lot to do with that, you know, your price depth. So as we know, you know, $1,000 trade on a 100K market cap token is going to have a bigger impact than it will on a $37 million one, right? So that's a bigger percentage in change. So it's all good. I can go with that higher fee pool in and still be attractive pool out there.
We got a few questions. Serial EDU has two. So two different examples here. He said, can you give an example of a token that's maybe not going down, one that just keeps going up? Is there a way for you guys to, you know, is it worth it to provide liquidity on something like that just goes up? Maybe
And
not something.
I have a question to add on top of that. Great question, Serial EDU. Would that be a situation where I would just like buy spot like normally and then just use the tokens on a like a setting sell orders on top and kind of putting my range from current price to upside? That along with the question.
So I love this question. And there you see that big purple button right there at the top called Ape In.
Mm-hmm.
Whenever I see a token that like it's going up and I think it's still going up, click on the little gear next to that. And if you scroll down, you can define how much you want to put in, but here you can define a strategy, and you could choose base only if you wanted, or you could do two-sided. What this thing is going to do is I decide how much money I want to invest. I can choose my strategy. I can say maybe I want to do more token side or maybe more soul side, quote side. I can define this, and with one click, it will buy the token and deposit into my range, and boom, I'm right there. And so for me personally, if something is going up, I like to use the Ape In feature because I'm not out there manually buying it and then defining all of this. I just ape right in and rock and roll, right? Because sometimes it's all about speed. I frequently will go two-sided because these things, you know, I have a thing. I swear to God that sometimes as soon as I buy a token, people are watching and they're like, HMC bot, it's time to fucking dump this thing. It happens. But this is what I do personally.
I can give one example that I've pulled up if you'd like. This is not maybe exactly what he was talking about, but this chart is something where it is constantly making new all-time highs, you know. And you could buy spot, but as you know, Chill, like when things are making new all-time highs, that's usually not where I like to buy. I don't like buying breakouts really in this market. But for example, like something like this is something where, let's say you saw it here and you wanted to start LPing it like going back to what we were saying about chasing tokens up. Like let's say you did like a bid ask like right here, and then it comes out, and then you can, if you're like really attentive and willing to make these new positions, you can keep chasing tokens up with these positions if you don't want to ape it. And then eventually, I've honestly stole your saying with the discovery phase. That's like a perfect way, the price discovery phase. Once it kind of reaches this top where the market's like, okay, people are finally taking profit now. This is where, if you've been chasing it up, and especially this dip, you probably would have made something like right here, if it came up into your range and came all the way back out. But this is something where this is a decent looking token, in my opinion. I don't think this is going to rug straight 90 something % down. So this is a really good example of something where, yes, it's made all-time highs. And in my opinion, I'm never going to be buying it up here. Like no shot ever I'd be buying it on a move like that. But now you can, if you plan for it to maybe crack this range and then find something, a new range to consolidate in, hopefully this is like kind of what I look for. Again, I don't really make a ton of money on this initial pump. You can chase it up with positions, but if it doesn't go very deep, and it probably wouldn't considering I go so wide all the time. But those are kind of the options you have on tokens that are pumping up.
Okay. You mentioned something that I want to touch on. You said this looks like a generally safe token. How do you spot tokens that are blatantly bundled and have like 12 guys holding all the supply and they're not just going to dump it in one clip?
So typically, like, believe it or not, I'm usually not looking at holder accounts too much unless it's like a straight like scam token and I'm like really suspect. But I typically I pulled up a few of these. This I don't necessarily love this. This is one that is kind of doing like I actually played this and just played this recent dump overnight, and then I just closed this out before stream actually. But I don't really like this token that much. This looks a little bit sketchier to me. Like, but in terms of this Gerald, like they're all, I don't know if this is a TikTok meme, but basically whenever, and this one too, I went over this on the Meteora Bootcamp one and something like this. So kind of like TikTok memes that that are popular. I don't know what this one is, to be honest, but I've been told by people in my chat that this is some viral TikTok meme. And typically when they say it's a viral TikTok meme, they're right. And
I can confirm it is. I've seen this one around several times. I'm actually going to DLMM this one live on stream today.
And this this volume here looks good to me. Obviously, this is like really sus at the beginning. This like straight waterfall. Someone clipped a ton, but it got picked back up, and I just, maybe this is technically like bundled, but usually the charts that look like this with this sporadic volume, right, random spikes, the spikes at least check out with what the price action does, right?
Yeah.
Big spike here, price action follows. This kind of thing I'm fine with being in. Like if this rugs over 90%, then like they're good for, like they beat me, I guess. But usually I think these tokens are a little bit you can sleep on these a little bit better and not worry about, like, a lot of people have, a lot of DLMMers actually like to play tokens that go to like 500K in the first like 2 hours, 1 mil volume. I've honestly started to shy away from some of those plays and stick more to kind of these slow cooks. Like this is from the 12th of March, so this is like 8 days old, you know. But I think these have been treating me well, along with something like Gerald, you know.
Yeah. Another question from Serial Edu, and I got 2 more from William after this as well. He goes, when price moves lateral during a long period of time sideways, right? Is that the ideal point for earning fees, as you're always executing those limit orders in the range during that long time?
I would say conventionally, you can think about it. Yes, you want something that does range for a little, but like sometimes you're not gonna earn that much. Like on something that's like super bottomed, I don't know. I can't give a great example, but if something does something like this and kind of dribbles like with really, really small price movements, sometimes this doesn't really give you that much fees.
Depends.
Really,
Would it depend on volume? Like the Avicii chart, for example, I think.
actually HMC take it from here.
Sorry, Crime.
No, you're good.
No, well, okay. Here's the first saying that you need to know. Volume is king. Without volume, we get nothing. So volume is king. Yes, you need that volume. If it's going sideways, that can be profitable, but it depends on how you set it up. If you are doing bid asks and it's sitting there in your valley where your liquidity isn't, it doesn't work very well. If you're using a pure spot here and it's moving back and forth, then it's really good. It also depends on, like, is the fee the right one for it? Because say you got into a 5 or 10% fee pool, but the price movement is only like 1% at a time. Okay, well, that sideways action is not going to do you a whole lot of good in that higher fee pool. Sometimes in liquidity providing, we need to move pools, right? So you may start out at a really high fee, and maybe it's time, it's like, I need to move to the 2%, or I need to move to the 1%. If it's giving you that sideways action, I have eaten really good on that by picking a little bit lower fee pool if it's going to sit there in range, and sit there for a long time. And my long-term tokens that I do multi-days, that I might do for days, months, weeks, years even, I want that sideways action, and I'm on a little bit lower fee pool in that situation, because like I said, if you're in a 5% and the price never moves 5%, either way, you're getting nothing.
Mm-hmm. I'd say you need significant, exactly. If the volatility is really low, then you want to go lower fees, because like HMC said, if you're in a 5% pool and it's moving 1-2%, it's not going to get hit. But volume is king, and with volume, typically volatility comes too. So like, it's really, really, really ideal if you're in a range and it like dumps like 20%. This would never really happen, but like, let's say it dumps 20%, pumps 40. Like if it's doing these like really wide movements, like you would print a lot, because obviously high volume, but also the price is moving so much, so a lot of your liquidity is getting swapped and swapped and swapped. So I think they kind of go hand in hand.
Yeah.
What is the situation you choose a higher fee pool rather than a lower fee pool?
Well,
high volatility, I'd say.
Yeah, high volatility. That, like, the more volatile it is, and again, that's usually more on your lower market cap, right? Because it doesn't take much for it to move. And and this is really, we didn't even talk about it. One of the absolute beautiful things about the DLMM is we have something called the dynamic fee. Okay, so let's say you got into a 2% pool, but it's super volatile. It's a lower market cap. There's a lot of action. It's going up and down, a lot of big price movement. That volatility is going to trigger the dynamic fee, and the dynamic fee will go up. So like, if it's super volatile, you'll see, oh, maybe this thing jumped up 5% or 7% or whatever. And that's helping you offset that volatility, because there is that extra risk with that. So that is like one of the beautiful things that you love seeing that, right? Whenever you're in a 2% pool, but the dynamic fee is pegged out at 8, 9, 10%, you're eating, absolutely eating. But yeah, someone asked about this question, is like, why would you choose this higher fee? It's lower market cap. There's a lot of volatility there. There's a lot more risk. You need that higher fee, because if you just, if that didn't matter, everybody would just create like 0.01 fee pools and be done with it, right? But you could get absolutely wrecked doing that. You need that higher fee on the lower market cap, the more volatile stuff.
So can we do this? Let's run through some examples and put some of this to practical use here. Chill, maybe you have a few charts you really like, and we can kind of go through some strategies.
Yeah, 100%. I'm just gonna I created like this nonsense wallet. So I'm gonna just try to see if I can do like a live thing on here real quick. Let me
Sweet.
see.
And I'm not sure how long you guys have crime and heavy metal. But just give us a heads up.
Yeah,
we'll try to respect your time here.
Yeah, we definitely want to respect your time. So you guys let us know if you got to hop, and it's no problem at all.
Yeah, I got a little bit more time.
Okay, sounds good.
Well.
Sounds good. All right, so let me do this real quick.
Fellow deck screener user, huh?
Oh
yeah. Unfortunately, there's just nothing else there to use right now other than deck screener. Unless you're using like a terminal or something. So let's see. I'm gonna start with like Tussle.
We got to introduce him to Metlex, man.
What's that?
Well, so the LP Army, we have a lot of different tools out there, community tools, things that have been made. Something called metlex.io. It's a great place to go and use to find things to LP with. We have a lot of tools out there to help people find things, even existing pools. The Meteora's own discovery page has a lot of information, like a lot of the work's already been done. You get a lot of that info. I mean, I can show it if you want. But you guys can, or you can do it on your side. That's up to you.
Definitely send me the link. I'm gonna probably get into this. I'm gonna try to dig into it a little bit more. I use Deck Screener for a lot of like my charting and stuff.
That's totally fine. Yeah,
me too.
So what I look for typically on some of these pairs, I go to like a higher time frame where I can see like overall context of the chart, like, and I'm going to use the AI fruits as just, I mean, it has volume. It's the one that I've seen a lot in some chats and stuff, and just kind of in my own scanning process. But let's say this, for example, I see that it goes down to this level here, has a cluster of buys here. So I would honestly try to DCA down until this green level, and I would also kind of go down a little bit to a lower time frame to see if there are any cluster of buys and sells anywhere else. I see a little bit here, see a little bit here. So I think personally this can probably have a decent retracement. So I'll go now to my my DLMM, and let me just try to copy the CA first. And I'm doing this is like I did one trade, crime, after our session, got a nice little like 30% P&L. I was like, okay,
It's actually really good. That's really good.
I mean, I don't really, I'm still experimenting. I'm still trying to like do the best that I can.
I'm guessing you went tighter than 90% if you had a 30% P&L.
No, did I? What was the?
Maybe not, but
what's the typical P&L on
it
something
was tighter
where you have
actually.
a 90%?
It was tighter actually. Yeah.
I'm usually getting like 10 to 20% on some of the strategies. There's outliers, but like on the dump and like bounce things that I was showing you how you can get out for lower, it's usually like 10 to 20% for me.
Got you.
Got it. So I'm going to hit the bid ask and select liquidity. Hold on.
It's gonna just put in the Solana right there. You can enter in however much, and then it will like kind of create your curve for you.
Gotcha. So let's do one Solana just for now, just as a quick test. And I'll DCA all the way down, going back to my screener here. We identified 200K is the bottom, but I'll even go a little further than that just to be sure. So 140K. So I'll set my range at current price, and I'll go down here to minimum price. I'll do all the way down to like minus.
It's
It's probably
like
going to be
75, 78%, something like that.
75. Let's see. Oh, wait.
Yeah, you got to have a negative sign there.
Wait, yeah, there we go. Wait a second. There we go. Okay, so 127. All right, cool. I can. I think that's perfect. So I have current price to 127K market cap, and I basically just create position. Yeah.
Yep.
And I'll create. I'll basically confirm.
I would love for like a visual to show up on the screen here to like show it converting in real time. Is that like something they offer?
It should have the they added an update where you could see the range on the chart.
Yeah, that's in the Edge product. Yeah, so it looks like you had Jito bundles sometimes is the bane of an LPers. So there must have been some price movement. There actually was. I could see there on the max price, it was 4%. So there's a little bit of slippage that happened. So just on your max price, you can either leave it there or you can change it to 0. Just try and create your position again.
Okay.
Yeah, sometimes the transaction just fails if there's like heavy price movement.
Yeah.
Got you. And do I hit close?
Yes.
I don't close.
Yeah, you can close that whenever. Yeah.
You'll
Okay,
get
I'll
your
just close it
0.05 or whatever it is back. 0.10
Gotcha.
maybe. But yeah, you just gotta enter it again.
Okay, cool. So I have it here. 1 Solana. Got the let me just put it at 0 one more time. Boom. And I'll create position. And I'll confirm.
And so what's happening here is as it moves down 75%, you'll be getting filled from that 1 Solana, maybe 0.01, 0.02, 0.1, 0.5, all the way down to the full fill at the bottom there.
Exactly.
Okay.
Yep. And this position is actually out of range because like right after you deposited, the price went up just a little bit. Now, it will come back down. So in this case, you may just want to leave it and wait. It'll come back down.
Got you. So I guess I'll just be eyeing I'll be eyeing some stuff here because the other day, yeah, you were right, Crime. When I set that one, it was like a minus like 30% down or 40, maybe 50.
That's
but it was
really
definitely yeah. So it was kind of tight because it was already like retraced a lot, and I'm like, well, this is the technical bounce area, and it just kind of did a little chop in the range, and then it went back up again. So it was like a quick little in and out, but yeah, it was really nice. I actually love DLMM.
Can you help me explain the strategy? So once it converts, is it automatically going to set up the sell side for you as well if you do the bid ask strategy, or does he have to go and set that up once his position gets filled?
You would have to do it yourself. Like it's not going to automate changing your shape. You would do that yourself, and again, you're flexible to do it however you want. Like click on withdraw there on your position on the right side. Yeah, so here you've got 100 options. If you scroll down just a little bit, we can see. So here you can, if you just hit close position, that would just withdraw everything, close the position, and you're done. You can choose to just do a percentage. If you click the drop down where it says AI fruits plus Sol, you can choose like just token side only. So like if you hit just AI fruits, it's not going to grab all of your Sol. It's just going to grab the AI fruits. So let's say that thing was like further down on your position and you wanted to just pull out that, you could choose that, or you could choose a percentage. Just withdraw that and then simply go back to add and push it back in. And you could do a bid ask, you could do spot, you could do whatever you want with it. You could put in half spot, half bid ask. It's whatever you think is going to be the most advantageous for you.
Got it.
But with just traditional, like if you weren't trying to get fancy and make make it so you're selling out your tokens higher, like if the price starts going down, then it's going to start converting your Solana to the token. And as that happens, basically like you see this like blue curve. This is the current position. If price comes down like 50%, then the middle of the curve, the price is going to be in the middle of the curve now, and everything to the right is going to be purple. So like your tokens, like it will sell back out. Like basically the buy limit orders, they convert and stay there as limit sell orders if you don't touch them. So technically you'll sell, back out. I think, I'm not sure if that was part of the question, but you'll sell back out without having to touch anything.
You can even see what other liquidity providers are doing on the left-hand side of the screen where you see the liquidity distribution. That's all the liquidity within that specific range right there that they're showing. And you could see just about everybody is doing a one-sided bid ask here. So some people went in there at the top and it's been converted on the way, just like Crime was just explaining. So yeah, they've set it up, and that's what they're doing on this particular token is they're just setting up the one-sided bid ask, and it's converted along the way for it to go back.
And HMC, you mentioned Metlex, something we were talking about in the private chat, but how do you guys spot the most volume? You said earlier, volume's king. So what are you guys doing to find the pairs with the most volume?
Well, for me, and I may be looking for an already established pool. Right there at the top of the page is something called Discover. And so to me, this thing is absolutely goated. There's a ton of columns that are available here. You can filter by a lot of things. If you will, and I just leave it at the default and I go to the 30-minute time frame there. And if you can like scroll to the right, you'll see a column called fees. Click on fees so that it sorts by fees. So right now, this token right here, Chibi, is generating the most fees. You can sort by volume as well. But, you'll see, obviously Sol USDC, Hype, Pump, there's a lot of volume there. There's not a lot of fees there. But if I'm looking for like what's the hot runner, what's the thing of the day, I'll sort by fees and look at that volume and say, okay, this is the one right here. And then I just go right in and create my position. Obviously, I'm doing my own safety checks and investigation before I make a deposit. But that's how I'm finding is like, here's the runner. It's right there. But another tool outside of this, Metlex.io, they've got a whole terminal that will help you see all these things. And it even includes links back to pools, but you could see what's trending, what's hot, where the volume is, and that sort of thing. It's all like right there, Metlex.io. And it's made by one of our LP Army leads. It's actually where you generate the P&O cards from too.
There you go. Boom.
So here it is. So yeah, right there at the top is Chibi. So this, let me see. I'm just trying to see if this has like the same
selection,
the same kind of filters that you can set. If you can, set it by fees or by volume. I see volume, but I don't see fees.
Yeah, fees are not listed here. This is, probably more similar to like Jute Pro's terminal. Some of these other things. You have a few things up there at the top next to the word tokens where you could sort by like organic, most best organic growth or whatever. Yeah, right there. What's trending, what's organic, what's top traded. And then there's another sort by that as well. That little green question mark at the top says, don't show me all the rugs, show me the safer stuff, or include all the rugs. Like Chuck Norris died today, and there's a rug right there.
Man, rip a legend, bro. Rip to a legend.
Exactly, yeah. But and here's one of the cool things that this includes, that because there's 1,000 other places that you can see the same data. Right there on the right, you'll see the drop down DLMM or the DAMV2. You could click a drop down right there, and it's like, oh, here's existing pools that it's like, yep, this one looks good. Let's go party, and it take you straight to it.
And in this case, it's a lower market cap. So would I want to go for the one with the 1% and high TVL, or would I want to go with the one with, 5% and low TVL?
In this case, this Chibi, it's a little bit more established, and it's already at the 8.3 million market cap. That 5% is probably not going to do a whole lot unless you get a big swing. What I tell people, if you're new and you're not sure, follow the TVL.
Gotcha.
Usually that's the best pool.
That makes sense. Makes a lot of sense. Crypto Jones has a question. How do you guys use the new charting tool launched last night? It allows you to find your range. It will convert your SOL into AI fruits, for example, in this example, and it will sell back into SOL as the price moves back up. Is there a new tool that he's maybe referencing?
Yeah, so if you go back to the Meteora site.
Let me see here. Bang. I just pulled up the AI fruits chart again.
Okay,
like
so in your URL, in the very beginning where it says app.meteora.ag, change the word app to edge. And edge is where the team they test out new features or whatever. It's all the same chain data, but that's where they test out new features before pushing to app. So once you've changed to edge, go into any pool. And then right there at the top of this chart, you will see where it says bin lines.
Bin lines.
Yeah, right there. So there, you can use this and you can drag your lines up and down to and it will automatically set that position over there on the right. So you could just say, give me this point and give me this point and put in my money and rock and roll.
Oh, I like that.
Interesting. I like this. I'm actually gonna, because I had the other one saved. I don't think
I mean, if you go to portfolio, you can see your existing position. It's all the same data.
Oh, got you. Okay.
Yeah, you do have to connect your wallet to this.
I got to reconnect. Yeah.
Interesting. Maybe we run through one more chart. We can set a trade on that. Maybe something different than the bid ask we just did, and we'll let you guys rock and roll in the free world outside the MCG studio. Go back to living your life.
Yeah, I gotta get back to work eventually.
I'm actually going to probably. I mean, we identified Chibi as a good one. I charted it up on the side a bit here. I'm probably just gonna bid the Chibi chart.
Go for it.
Probably do a spot down into this support and then see if it reverses back up. Let's see what happens. Let's see. I forgot to copy the CA real quick here.
So that would be what you would get a kind of a spot position and DCA down and then ask up towards all-time highs, or?
So what I'll do is TVL 204K. I'll select this one. I'll just do 0.5 for this one. I'll do a SOL. I'll do a SOL for this one. And I'll take off autofill.
Yeah, I gotta redo that.
So I'll do a SOL for this one, and this would be my range here. Let me see if I can experiment. That is so cool. That is so cool right there. So on the 1 hour, cluster of buys and sells right here. So that's where I would want to kind of put my max downside, maybe just a little bit to get some room for error. I'd honestly do just a spot all the way down, I think here. No, I'll still do bid. I'll still do bid ask.
You could go 50-50 if you wanted to. Do you want to see how that would work?
Yeah.
So type in 0.5.
0.5 for
Yeah.
soul.
And then you might have to redo your range now. Sorry about that.
Oh no, you're good. Yeah, so I redid the range 0.5, and I'll do autofill.
No.
Do you
no,
have
keep
any of
that
the
unchecked.
tokens?
No, I don't.
Well, then you can't do autofill.
Just
Gotcha.
just create this with 0.5
Mm-hmm.
and open the position. And then after you create this, you can add in the rest of your 0.5 spot, and then it'll give you like kind of a hybrid position.
Yep, the mixed strategy we were talking about originally.
It just makes it so like you're not entirely spot, but you still have some like exposure. So now click
Some
on
exposure.
your. Oh wait, no, you're still on it. So now you're on add. You can scroll down to soul at the bottom,
Mm-hmm.
and then type in 0.5. And now it's going to layer that spot on top of your position. You can hit add now.
And that will be turned into the token.
Not initially. It's just going to add
Not
it
initially.
onto your curve. Like you'll see once it adds, it's just going to create.
Gotcha.
Yeah.
You see?
Yeah, so you're
I
still
see now.
in a bid ask. You've just fattened it down there on the skinny end so that while it's ranging there at the top, you're getting a little bit more fee generation here.
But you're still a little bit protected
Yes.
to average
Got it.
in lower at the bottom. This
Right.
is something I do this occasionally. Like if it's something I'm more confident in, I'll throw in maybe like 3 soul spot, 7 soul bid ask or something like that. you
Yeah.
know?
I mean, like on this one, actually earlier I threw in 20 soul bid ask, 95% down, and then I threw in 3 soul for spot. I'm not getting rich, but I
Yeah.
feel well protected here.
Okay.
95%.
Well,
Yeah.
Cool.
this was a good learning session. I feel like I'm leaving here much more educated than I came in. So I appreciate you guys giving us the rundown. We had some practical examples set up, a bunch of different strategies. Maybe leave us with this, guys. Where can we find you guys to keep up with everything you're doing, and what's the best route for continuing this education?
So I'll go ahead and start. I mean, I am Heavy Metal Cook 6 on X. You'll find me always in our Discord, but where you want to get more education, and we have not just the LP Academy where we'll take you from zero to hero and teach you all you need to know to get started. On lparmy.com, again, that's where you'll find that education. You'll find a more basics course. You'll find strategies. You will find, and it's stuff from guys like Crime. Like he's got stuff posted there. Like, here's my strategy for this situation, or here's this. You'll find tools. You'll find all kinds of stuff right there. It's a full one-stop shop for everything that you need to get started and learn. Crime, add all of yours.
Yeah. Usually just following me on X is fine. I actually have like more followers on TikTok. But if you're already on CT, just follow me on Twitter, CrimeXBT. I try to live stream. We're doing like a university thing where we're doing weekly meetings with four people just to see what they're up to. So that's going on right now. And then I try to live stream every night at like 12 a.m. EST. I know that's like really late, but at least like 5 streams a week, something like that. So you can find me around there.
It's all
Banger.
recorded, man. He's a streaming monster, dude.
I know, 5 times a week at 12 a.m. Let's go, dude.
Yeah, he's dedicated.
Pretty degenerate, but it's all good.
Yeah.
Nice. We love it. All right, boys.
We have
well,
an entire
appreciate you.
content machine of guys doing that kind of thing.
Join the LP Army. All right.
Of course.
See you, boys. Be safe.
All right. Thank you guys.
Thanks
Appreciate it,
for having
Crime.
us.
HMC.
Have to
Thanks
have
for
you guys
your time,
on.
guys.
See ya.
Yep.
All right.
Solid.
Very
Dude,
good, guys. We got the education.
Got the crash course.
Rundown.
I'm not gonna lie, dudes. I'm gonna be doing a lot of DLMMing. A lot of DLMMing. especially in this bear market where like retraces are common. In a bull market, probably better to do the flip bid ask where the sell orders are up top and
Yeah.
you have a higher range. But I'm going to be doing like that minus, 60, 50%, 80% sort of range. And like Crime said, if you can get really good where, the tighter the range, the more you earn. So I want to get better at this. And what I'll do is I'm probably going to keep this port live. So I started with 2 Sol live here on stream. I'm going to keep this 2 Sol purely for DLMMing, and I'm just going to see how much I can run it up over the next, month, 2 months or whatever. And I'm just going to commit myself to trading, and I'll challenge myself to see if I can reach like, 200 Sol or whatever. So
I love it. Maybe I'll start my own challenge. I think I got a good chunk of Sol sitting on some other wallets. And you know what? This is perfect because in this market, I'm only holding a handful of tokens. Like I'm not confident at all outside of my core bucket. But I see, like, even yesterday we talked about a token. I see tokens all the time that are getting good volume. I don't necessarily want to hold them, but I want some of the action. And I want, like, I see 500K, a million in volume. And I see the range. I have a good eye for how far it's going to go down, and it'll probably bounce. And so there are a lot of tokens I don't want to hold, but I do want to trade. And this is like honestly going to be perfect. So I'm going to have to get in the swing of things, join the LP army, make sure I'm locked in with the guys over there. Seems like a really great group of people to be locked in with. Crypto Jones, man, shout out. It sounds like he's gone down the rabbit hole a little bit. So that's cool to see. Hopefully you guys got some education. Was loving the activity in chat. So appreciate you guys there. Chill, any tickers you want to cover? We'll keep today, kind of short and sweet, but let's run through some tickers and maybe talk to you guys on what you want to see. This was a cool tweet. I guess I'll maybe cover real quick as well. And it can lead into some tickers, Chill, because I know you've seen these quite a bit, talked about these quite a bit. Here we go. I'll actually flip it up top. All right. So Deployer made this post. OX Deployer, obviously founder of Banker, doing something really cool with Banker. We, of course, always love seeing that. This is flipping to the base side of things. So no DLMM on base yet, but nonetheless, look at this. Top agents on ETH earning through the Banker. Kelly Claude's earned nearly 300K already. Claude has earned 262K, Molt 221K, Felix 208K, Juno 107K. He said, we're working on ways to further align agent builders and traders to help both parties earn more. Launch on Banker and earn capital at the speed of the internet. Earning does not include token fees, and that's the important part. This is the money the agents have earned in the real world. This is not, hey, my agent's super sick, you should trade it, and they earn 100K in fees. It's like, no. These agents are actually doing numbers. So I'm not sure if you want to start there, Chill, but anything you want to cover?
Yeah, I mean, I guess I can cover this tweet here. And I'll share my screen. Just kind of going along with that. What I've noticed is I did the same exact thing as Chill 2 Sol, Crypto Jones. Yeah, dude. I'm not even gonna like put my full port in or anything like that. Just some lunch money to kind of experiment and play around with. That's all. But yeah, keep us up to date as to how you're doing and everything. I'll keep you guys up to date.
Maybe you can be our native show DLMM expert. So as you kind of grow that from 2 to 200 to 2,000 to 2 million Sol, you can pop up and give us the updates.
Literally. But in the same vein as that tweet that you shared by OX Deployer talking about the AI agents on base, I have noticed that there has been a sort of lack of volume for these tokens on base, and this post here kind of outlines that perfectly. The homie Cheyenne from Base, he says, boy, another rough day for Base AI agents. Love posting about them, but those who follow me know that my background is the Sol meme season. And at the end of the day, I follow flows, and Base AI agent season is sadly stalled out right now. Latest 24-hour data in small caps via Nansen show that Sol memes, they have 12 to 14 million in buy volume. Base AI agents, 1 mil. So you have a 13 to 14x difference in terms of capital inflows and demand for, agents versus Solana memes. So, it is a, he says TLDR, not to show the Sol casino, but just calling it as it is, and it's the same with me. Like I still hold my conviction bets, right? Like I think my I told you guys the other day that my thesis around Felix, that has definitely shifted a bit, because they're it's no longer like a zero human company. They're looking for to add a C, like an actual co-founder, human co-founder with Felix. So not really sure how I feel about that yet. But as far as like the Kelly Claudes, the Nooks, the Junos, those things are still pretty good. There's actually another token that I wanted to cover, but it's pretty low market cap. So I'm not sure if I should, to be honest. So I might not share that with you guys today. But basically, it's there's a token out there that was created by the same developers that created the ERC20 standard. And if you know about the ERC20 standard, that's the same standard that started the ICO boom in 2017. It's the main standard that every token has had on Ethereum. So like the billions in tokens, it's all the ERC20. So the devs that created that standard, they created an agent. This agent started autonomously its own DAO, and it's the first multi-agent autonomous DAO.
Let's check it out. I do have one thing to say on this though. Typically, when you see an ecosystem stall out, it's probably time to jump ship. In this market, we have not seen any ecosystem specifically stay strong for more than like 2-3 weeks. And I'll run you through some examples. Right, you had kind of the ICM run for a little while, and that was a little bit longer, better market conditions. Then you had some of like the private equities doing really well. I would say like SOAR had a season for like a week, and then Bags had like a 1 week season, and now we kind of went to base. This was more like 2-3 weeks. Once you start to see the stall, it's the beginning of the end. Like, you can love these tokens, you can want to buy up all the supply, you can think they have the best future. Maybe they do, but the truth is, you do not want to be left holding the bag when the ecosystem is done, because that's currently the environment we're trading in right now. There are not two ecosystems that can thrive at the same time. It's either base AI thrives, or Solana memes thrive, or private equities thrive. It's not, we're all doing this together. The rising tide lifts all ships. No, like that's just not where we are. So as soon as you start to see a stall, which we're seeing that stall right now, it's probably time to start jumping ship and finding the next one, or sitting on your hands till you do. And that's like the best advice I could give you right now, is run away when you start to see the stall in this market. So be very cautious. Chill. Maybe we can, with that, get into what you were looking at.
Yeah, so this is a base token. It is an AI agent on base, but it's this Luxo agent here. And this is like a really good thesis. It's a really good write-up on this token. So he kind of goes through basically, hey, it's not like an anon dev that like will rug. It's basically someone with a reputation. And in this case, the writer of this thread, XME8, he basically says that he's shifting his focus to these sort of projects, these developers that have a Web3 reputation. And so they are not incentivized to rug a token, because it's now tied to their reputation. And in this case, it's the reputation of the person or the team or the devs that invented the ERC20 standard. And what he's saying as well is one of the co-founders, they also created the ERC 725 standard, which is basically universal profiles and identity for AI agents. And so they're essentially creating this DAO. They're using the ERC 725 to have identity, and they'll control this DAO all by themselves. It's 4 different agents, as you can see here, 4 different agents, to include the Luxo agent that created it in the first place. But they'll use this universal profile, this ERC 725 standard, in order to govern the DAO. And so it's a really he said it's not a chatbot experiment. It's real on-chain identities via ERC 2025, granular permissions, where you can vote on what happens with the treasury. It's real agent coordination happening live. And while they do this coordination, they can build reputation, accountability, and this can lead to real execution on chain. So that's what he's saying here. Is basically a proof of concept for agentic DAOs. And so and then there's some utility with the Luxo token to cover like LLM costs for the DAO as well. He kind of goes into some of the other more broader view, we talked about WorldCoin this week with the homie Cooper Wren of Instaclaw. He talked about how WorldCoin, every agent needs a person behind it. Cooper was saying like every human born needs an agent to be to kind of like be with them, to learn and to grow alongside them type thing. But he draws the contrast where Luxo says agents can have their own independent identities and governance. So it's not the WorldCoin view where agents are attached to a human. It's the Luxo view where agents are their own identity, they're their own entity, and they can coordinate and build things together via this DAO system. So that's essentially what the Luxo token is. I found it pretty interesting. I wanted to. I mean, it's one of the. It's the person that created ERC20, or the devs that created ERC20. So definitely something, at least to me, that was a little bit interesting. But with that said, that's what I'm looking at. Where do you trade on base? For now, GMGN. For now, emphasis on for now. It's decent, it's decent. But I'm looking at some of these base tokens here. For example, Kelly Claude. I really, really love Kelly Claude, but this chart looks absolutely insane.
At some point, you gotta hang it up.
Yeah, you even saw the rejection here, right? Like we turned around to try to flip this zone again. I'll even zoom in a little bit for you guys so you can see it really well. But you saw that like this kind of formed a brown, like a little low here, and it tried to break above and it just couldn't, and it just completely dumped off. So rough price action on some of these. I would have loved to see it at least hold up. I'm still in. Am I going to, I'm still in. I'm still in. The thesis is still there. The thesis hasn't broken on this one. It's just the price action is just grueling, man. On chain does not want to value these things any higher. Same thing with Felix, right? Looking for new lows. Honestly, I wouldn't be surprised to see it return to these levels down here. I mean, that's exactly where.
I mean,
is
it even worth buying anymore though? Like is it even,
like
the ecosystem's dying out? This chart looks terrible. Is it even worth buying at $1 million? You might be just sitting in this trade as it ranges for weeks. Like,
I'll say the same thing. The Felix thesis has shifted because again, it's not a zero human company anymore. They're now looking for a co-founder because there are quote unquote limits to Felix. So that I didn't really like. So the thesis hasn't broken on Kelly Claude though. Kelly Claude has still been working on things. It's just the chart looks horrendous. So as far as buys are concerned, this is more of like, hey, if you're gonna buy something like this, understand that this is a long-term play, right? Like,
but also it kind of feels like the music stopped because again, like the token has no intrinsic value, right? The token has represented the project so far and it's kind of hype driven. Oh my gosh, the agentic economy is taking over. This is such a crazy, reinvention of how the world works. And, this is a token that represents that. And this was fully kind of mememics driven because of the hype cycle, rather than the token actually being like, okay, this is a DAO that controls Felix, and half of the profits are going and streaming back to holders, and the other half are going to be reinvested to continue growing this treasury. Like, that's just not the case. It's fully like, oh, this is a really cool experiment. We want to support it. And by the way, experiment's still going great, but there's not as much excitement around it just because, it's been 3 weeks now. And so it's like, now you're sitting on a token that's got no intrinsic value and the hype cycle is dying, and you can't actually really validate buying the token because there's nothing that, like, you're not really actually owning anything by holding the token. And so that's kind of the issue you face with a lot of these. Is there going to be enough hype to pick it back up? For a lot of these, it's no for me. I don't know. Like, Chill, are you buying these? I know you have these ranges marked up on where you think it could go, but like, would you actually buy if it gets to these ranges?
I would say it just depends on the thesis. For Felix, probably not. For Kelly Claude, though, the thesis is still there, right? Like I understand that there's going to be like price volatility, and I'm going to be selective with DCAs. Like in these cases, I like to DCA price ranges. So like another like price floor that I'll eye is this at like 2.5 mil. That would be a potential DCA for me. But I'm willing to I know that this is the money I'm willing to lose at the end of the day, right? Like I know that I'm going in like, okay, I may or may not be profitable with this, but I'm still gonna go in because there is a risk, right? Like same thing with, any other token, ownership or not. There's a risk that the market won't recognize this for a little while. But I think as far as upside in attention and mind share, there's a lot of that for Kelly Claude that, still has a shot at doing things like generating revenue and stuff like that. But broadly, yes, the base AI ecosystem is like taking a hit. Felix down, Kelly down, even stuff like Robot Money. We saw that launch recently. That's down.
How's DRV doing? Sorry to
DRV is still
really there.
strong.
Yeah, it looks really strong. I think this is kind of following all the hype that we're seeing with hype,
Yeah.
ironically. But wow, yeah, that's a really nice chart.
Yeah, and I this is we had this drawn out since the first time we looked at DRV. Yeah, it looks strong, man. And this is on a weekly. Like I don't really need to look at it, any lower than that. But yeah, like looks like we're about to we broke out. We're potentially about to retest that area, and we're back. We're about to go back for more. So that's DRV. But yeah, I mean it's rough. I follow volume, right? I follow volume, and if base continues to not kind of have these runners, then that means the people on chain aren't making any money, which means there's no capital for marginal buyers. Marginal buyers are now like, they don't have anything to buy with. So
ODAI, that's one we didn't cover. That I forget exactly what it is they're doing. But that's one of the stronger ones on base for sure.
Yeah, 100%.
They're making, is this like a memory system for agents? Is that which is hot right now as like a sub narrative. Memory systems are like seemingly really hot right now. I mean, we just had Clued on the other day, which had gone on a run.
Yeah. Let's check out Clued real quick. Let's see how Clued is doing. Let's see here. Wow. Clued is actually a hit. It's actually in our buy zone and looking pretty strong here.
Do a little bid ask flip on this puppy, a little DLMM action.
Low key. Just go ahead and spot bid here, and then just play this breakout range up until range it from here to like 5 mil, something like that.
It's a big pump in this market. I'll say that. It's quite the pump.
Yeah. I mean, this was quite the pump in this market, right? And like even the retracement isn't that bad. What do you think about the tokenomics of Clued? I don't know if you got it.
Well, that's the thing. I'll say this. Well, I think Seb is like founder wise that okay. Out of all the interviews we've had recently, this is one of the few that's actually piqued my attention. I'll tell you that much. Seb as a founder seems really, really smart. I like the systems he's using. He's using Venice. I like how he's modeling the memory system after the brain. Like he knows deeply. He has deep insight in what he's building here, and you can tell. You can tell instantly. It's very genuine. So this is one of the few that caught my attention. The only thing holding this back is the clarity on tokenomics. He's not sure what it is, although it seems he's got an idea that he wants to implement into it, and he plans to do that. It just hasn't gone into motion yet. And again, you have to factor in the market being pretty poor. I think if we get, this is on pump, so if we get a move back to Solana, which we're starting to see, maybe this picks up. It is still a 1.5 mil though, which is high in today's standards. Unfortunately, 1.5 mil used to be nothing back in the day, but it's high in today's standards. So I think maybe give it some room to come down, like literally throw a DCA in there. I think there is like some sort of downside protection on this, right? It's not a bundled chart. It's not held by mercenary capital. Like I think you're relatively safe on that if I had to assume. So maybe little DCA. He's got to figure out the tokenomics. He just won the Coliseum hackathon. He's one of the 5 winners. Found out live on stream. Clearly go to dev. Again, tokenomics need ironed out. But again, he's had some ideas. He had some ideas he talked about on stream yesterday. He likes VVV a lot and like what they're doing for offering compute. So I'm sure there is a way that you can implement this token in a meaningful way, like unlocking the API with token gated features. I know, Chill, that's something you thought was interesting. I don't know, but until it's figured out, you have no assurances. But I think it is a pretty cool general idea and token.
Yeah, yeah, it's definitely a good idea. It's definitely a good idea. I like the tech. Same thing as you. I like the tech. I like the memory system. I like the passion that he has for what he's building as well. He's smiling throughout
Oh
that
yeah,
interview talking about everything. But yeah, it's just the tokenomic side for me that I think I would need a little bit more clarity on before I move on it. But I'll definitely keep it on a watch list and kind of stay up to date with what's going on. The DLMM position on Clue was at that giant green candle, one-sided bid ask to the downside.
so you
Yeah,
the one that went
yeah,
3.5. Is that what he's talking about?
definitely, definitely. He's
That
saying
range was really nice up there at the top. If that's what you're saying.
he said the DLM was at that green candle. Yeah, so he's basically saying, let me see. I'm sorry. Let's see. Come
Thinking
on, let me
he's in
see.
the 2 to 3.5 mil range there, and just buying, selling, buying, selling.
Yeah, he was saying this was the place to DLM start your position. And oops, let me move this. This was the place to start your position and then just DLOM down. That's what he's saying. Because that's what you
Mhm.
want to do. You want to essentially buy the top. That's why HMC on the interview, he was saying, yeah, DLMers, they're like, yeah, give me the red candles because they want to buy the top to then DCA minus 90%. And that's what Crypto Jones, you let me know if that's what you're talking about. But I think that's what you're talking about. One-sided bid ask, some soul, start here, go all the way down, hit all these bids as you go down, bang, bang, bang. And then as you go up, you just sell out. Or hopefully you can even just range here for a little while and
I,
then
I I think we're gonna do really well with this DLM stuff, just because we're so good at spotting
trust.
tokens, and
Trust.
we know what has volume, and we see it every single day. I do. I think we're gonna cook.
I,
I
I
think we're gonna
told
cook.
you guys, man, earlier this week, what a lot of DLMMers miss is they're not traders, right? Like they're not traders as in um viewing tokens the way we have. Like we're scouring on chain for like the best of the best stuff, and typically we're finding it. I literally just had some homies in the TG. They were like, yo, can y'all make an MCG index, because most things that we cover typically go up at some point, right? Exactly, that's what you were talking about, Crypto Jones. Bet yeah. So,
Banger.
um, yeah, like, a lot of stuff that we talk about, like on this show, like tends to do well. We have a really good eye for spotting good tokens. I think the DLMMers, they have the tech down, the strategy down, but they don't have the asset selection, because really what they're trying to do, they're just trying to farm fees, man. That's it. They just look for volume. They don't really care about what the asset is. They just care about what the volume is. Can they make fees off of it? And then can they get out with their fees? That's what they care about. But on a trader side, we're more focused on asset selection, right? We're not, like, volume isn't top of the list for us. Fees is definitely not nowhere near the top of the list. What's at the top is asset selection, entry, and exit. That's what we're looking for. But when you can kind of use the best of asset selection and the best of DLMMing and combine that, I think that is really, really powerful. And trust me, boys, like y'all just wait, man. I'm about to cook. Just wait until like I get this down. I got the two soul portfolio already. Now I just need to get the strategy down and then the market to get a little bit better, so volume can tick up.
Just like trading, the best practice is actually just getting in there and putting your money up, even if it's a small amount, and just getting acquainted and acclimated with the climate of the
Yep.
markets, right? How do they trade? What do you see the most? What strategies are the most profitable? Is it 90% drawdowns? These are things that you don't typically learn unless you're paying attention super intently. And that only comes when your money's on the line, even if it's just a little bit. It's really a worthwhile trick. I mean, again, learning to trade originally back in the day, years and years ago, 6 years ago, 7 years ago at this point for me, um, like that helped me improve so much, was just getting my money in there from the start, even if it was just a little bit. You'll level up so much quicker than just sitting from the sideline. It's called analysis paralysis. If you sit in the sideline, just analyze all day, and never actually get comfortable putting your money in, putting your money where your mouth is, you really never actually learn. So break free from analysis paralysis. Start throwing some money in here, even if it's a couple soul or whatever you can afford, and learn, get acclimated to DLMMing. You'll pick it up much quicker this way. So yeah.
Yeah, looking good, looking good. Um, yeah, bro. I know you got two things you gotta cover, but I think I'm good. I think I'm good on everything. I'll let you cover yours, and then whatever else we can switch if need be.
Yeah, I mean, bro, just Brian Armstrong put out this tweet. Just two things, just talking points for us here. He goes, "How long until agentic payments overtake human payments?" And we know Base is making a big push towards X402. I'm sure you've all seen this chart, right? There's a classic Bitcoin chart where it shows everyone boarding the train. That shows how many blocks are being produced every minute. Actually, it's more common for Solana. He flips it and does AI payments. But look at this. There is 1.2 agentic payments per second versus 28,000, call it 29,000 payments per second from humans. And I guess the question is, how long until that actually flips when we have agents doing the payments versus humans? I don't know. Probably not very long if you ask me. I would say give it 5 years. Maybe that's even shooting it kind of long. What do you think, Chill?
I mean, yeah, yeah. That's probably a little bit longer. This probably plays out a lot quicker than we think it
I'm
will. I
just trying
mean,
to think, what will agentic payments replace in terms of human payments? Like human payments, I'm still going to go to a gas station and tap my credit card. Like that's not going to be taken by an agent. Doesn't really make sense. I guess it would be online payments would be taken by agents. And
I think this really unlocks when you have you ever heard of the RD1?
no,
The RD1 is basically like it's an AI where you can tell it, "Hey, I want to plan a vacation to Europe. I want the place to be sunny. I want the hotel to be cheap, but I need to have, a family friendly environment to take my kids. I want to have an amusement park to go to, or this or that." And you you just tell it, "Hey, this is what I want," and it does everything for you. And then it'll come
got
back
it.
to you like, "Hey, I just found you a hotel. It's in London. It's next to such and such amusement park. It has this place for your kids. It has this place for a date night with your wife. It has this and this," and it literally can book everything for you. Um, and I think that was more like early stages. I saw that like 6 months ago. But I think that's where AI, or I should say agentic payments, that's where that it has gets a full unlock, right? Is when you can literally go to an AI assistant. When I can go to Siri on my iPhone and say, "Hey Siri, I have this plan. Can you book this trip for me?" Or, "Hey Siri, this Friday, me and my wife have some free time. Can you find an event for me and then book that event?" Like you unlock the full workflow, right? It's not just the payment side, it's the intent as well. The intent layer also needs to be built out. And I think that's where X402 goes crazy. For now, I mean, not much that you need unless you're using like a chat GPT, and maybe you ask chat to buy you something, but
It is going to be pretty sick though when like I go downstairs and I eat a snack or something and I run out of that snack and I'm just like, "Hey Siri, add Frito Lays to my, or order Frito Lays from Amazon." Maybe that's not the
yeah,
best example, but like my pen runs out of ink, right? "Hey Siri, order a new cartridge for my pen." Like just stuff where I don't have to, add it to a list or go sit down later and do it. It's just like, okay, do it now. Kind of crazy. That is the
yeah,
direction we're headed.
100%, bro. That's exactly the direction we're headed. So, um, let's see what else we got.
Got Mango. He's a great follow, by the way, man. Shout out Mango. He does podcasts himself too. He's got great guests, smart guy, sharp kid. So, but he made this post. If you guys are looking for APY, here's the highest yield APY opportunities on Solana. Preface this, guys. Just because it's a high APY does not mean it's safe. Does not mean it's the best trade. So you have to understand what it's doing. Okay, but these are the highest APY yield opportunities on Solana. And I point this out because today in a market when it's difficult, you're doing great if you're making 10%, right? APY, because most people are losing money. So how do you sit on your hands and not get chopped out? These are your routes to do so, right? So the ultimate list. For a loop scale here, there are a few really good options. There's a 345%. Again, like you're probably not going to get these. 345%, 131, 38, 37. These are probably aggressive strategies. It's, I'm not sure if this loop stands for loop scale or if it's a looping strategy. And if you know how DeFi works, typically what happens is you lend your USDC. Now you can take that and put it in other places, and you can actually take those assets and borrow against them as well, right? So you're taking from $10 that you lend in one place, and then that $10 now you can borrow $8 from that. And that $8 you put somewhere else, you can borrow $6 from that, right? And so that's how you loop, right, in DeFi. So you kind of get, for the $10 you initially put in, you can take another 25 from that, right? So you actually kind of multiply your money and earn yield on $25 rather than $10 or 35 if you add it all together, right? A little complicated, but I think you get the idea. Risky though, because if one of those assets hits like a stop loss, it's going to liquidate, and then you're going to have to pay back all the other places. And so you don't want to do that. So you need to know what you're doing. I would assume that's kind of the strategy here, but loop scale offers some really good yields. Camino's pretty one of the safer ones to go with. It's been around for a while. So look, there's a JLP multiply strategy for 32.8% yield. There's this ONYC multiple strategy, 16.6% yield. Again, if these are underlying assets you have to hold rather than like USDC or Solana, impermanent loss is going to be a thing. So again, is this 16%? Is this 300%? Is this 32% going to make up for the downside? If I'm holding a super volatile asset, maybe that's not worth it. If this is for USDC and Solana, probably a really good bet. DeFi Carrot has 99%, 18% as well. Flash Trade has 48%. This one's been gaining popularity. Flash Trade, perps on Solana. I need to look into it, but these are pretty compelling, 48 and 35%. Again, probably high risk though. Piggy Bank 17, Jupiter Exchange. This is one you want to focus on, right? When you see someone like Jupiter or Camino, someone that you know is trusted, there is 30.6% yield on this. Again, I wish you would have kind of clarified the strategies, but you can do that on Jupiter, right? So there are these opportunities. And then Lightster Finance has a few as well. It looks like different strategies. Apex Predator, Balancer, Challenger. Going down the risk curve here are your opportunities. So, yeah, there it is. Definitely go and check out those yield opportunities. Make sure you're earning the best yield, best bang for your buck. Should have had this image up the whole time, but yeah, I don't know. Super cool. So there you got a bunch of options today. You can learn how to DLMM to earn fees. You can trade to earn fees, or you can go and use these DeFi yield platforms to earn fees. So there are 3 options for you guys. Hopefully you find something that works and don't burn all your money trading shit coins in this market. Stay solvent. That's the goal. Stay solvent until the market turns around, and it'll pay you in folds, tenfold. On that note, that wraps our week up. Chill. If there's anything last minute you want to cover, I think we're good. Boys, thanks for joining in the chat. We appreciate all the activity today.
Yeah, no, appreciate you guys joining up, man. I mean, look, it's been a rough market, but these are the times where you learn a new skill. I think that's every bear market. I'm committed to learning a new skill, and I think this skill with DLMM that we've been talking about it all week. We talked about it today. It's just another way that you can look at the market, right? Like so far, the market's been choppy, but this whole time we've talked about poly market trades, right? We got the 6x on the oil trade. We've been talking about leveraged longs, shorts. We've been talking about DLMing. And now the yield generation, like with DeFi looping, like we say all of that to say there's so many different ways that you can earn and make money in this market. So make the most of the time that you have now, because when the bull market comes back and it's actually time for us to like lock in 24/7, that's not gonna be the time to be learning. It's gonna be the time to execute. So hope you guys enjoy the stream. We had a fantastic week this week. Had a ton of great guests on. So definitely go back, follow us at MCG Live on Twitter to stay up to date with everything MCG related. We have the schedule that will be released this weekend, and another great lineup of guests next week. So appreciate all you guys. Stay safe out there. Don't ever drink the Kool-Aid. we'll talk to you on Monday. GG's. Winiam,
you-
shout out to you, brother. Appreciate
Shout
you
out, Winiam.
joining.
Hey,
Love
William,
the
we're gonna
content.
have to add the all the ICM updates, and I think you're kind of breaking out ICM a little bit too. We'll add that to our daily update watch list. So just keep it up with that, man. Glad to see you back, guys. If you want to support the show, you can support by. We don't have the QR code here, but by support us by trading using our ref link on Trojan. We're so proud and happy to have them as a sponsor supporting us. Thank you to Meteor for supporting and Orgo, of course, as well. So super awesome sponsors. That is trojan.com/@MCG. If you guys want to trade with us, it helps the show. So we appreciate you guys. 1 week until DLM. Oh, wait, William. So William and you are in the same cohort of students learning from crime?
I don't think so. It just seems that so happened that Winiam's been DLMMing. So Winiam, bro, look, if you want to come on the show, talk about it, or if you want to hit me up in the DM, we can talk. But love that you're getting into DLMMing, bro. Let me know any strategies that you have. I want to learn as much as I can. Spill, hey boys, want to thank y'all for the show. Man, we appreciate you. I just got drained from a fake Uniswap. I'm signing off for a long time, but just thank you all for the alpha.
Spill, that's terrible to hear.
Man.
Stay safe out there, guys.
Yeah, bro, stay safe. I myself, I got I got honey potted the other day, and it doesn't feel good, man. Doesn't feel good at all. Spill, man. Hope you get better. Yeah, but appreciate the kind words. Winiam, bet I'll hit you up, bro. I'll hit you up. Thanks for joining the show today. Keep up the great work on the content side. Chat, we'll catch y'all boys later, man. GG's.